You just been at it a month? Oh, with us, yeah. Yeah. Hey. Which one?
There's like a pair of stocks. One is the inverse of the other.
SQQQ. Yeah, SQQ, TQQ.
Okay. Because there was a time, was it you that was trading that or somebody else?
Yeah, I was trading them.
Like when one went up, you would just put
the other one.
Yeah, on the other one.
Yeah.
Yeah, UVXY, everything. Yeah.
It really is the candles, bro.
It's the candles.
See the candles.
Do any of you have the live stream them up? I want to see, yeah. Yeah. This guy.
And here's the thing, it's like, then you see what the latest updates are, right?
All right. Let's get ready for showtime.
I tried it back testing. Yeah, I tried it back testing.
That is really like, if people actually did that, it would be out. It's basically like taking flashcards.
But what's the confusing part is like,
It is not easy.
It was like, it was formed because you showed up like,
We're gonna get into it today.
now we're here this week, but you would need this, because we're going based on the weekly, right? You need to see what I'm starting to touch around here, and then you have to check the other time frame. Okay, it's a 1 hour issue, but we can eliminate every other, right? This is the weekly. So we would need this more. show you $250. That's the goal, and then the whole thing is that's the goal. I mean, not right away, but if it went down, it has to go up. But that's where, because it goes really low, that's where you get that free money. Hold on to it. Because you're like, oh, this is my PC was before. And then what it is, me, I see the contract, right? I'll go ahead and get to read one, like, 4.50 billion, why not 697?
Yeah, well, okay. I'll tell you this, to try to rewire your brain, when you see the 341 like that's a full contract, the reason it's high is because it's more likely to win. It's like when you're at a blackjack table or whatever, but you put more money up, or they make you put more money up, it's because you're more likely to win. So they're trying to scare you from having to play. That's what the market's doing. They're trying to scare you out of not even putting your money.
And the interest, you gotta look at the interest too, because that interest is in that particular call.
Because 341, there's an equation that determines the value of the contract. I'm kind of trying to figure it out, but I don't have all the math. But all the various Greeks that they told you about, those are variables that create that value, that number. And one of the variables that makes the number really big is interest, right? As well as how close is it to like being a winner for principal. So when they're
Probability is probably higher.
yeah. So that's why when you see contracts in that big list, and then when they're closer to like the current price, and then past it, and like already in the money, that's why they're more expensive because you're already raising the
So like, for instance, I'm looking at this, right? It's the volume of book. So
I see that.
sellers.
I'm just helping because I don't have the time to start screaming. I just help Prince and help you guys understand what you're looking at. What's your name? Danny-san. Because it's Miyagi and then Danny-san. That's my sensei. Just a little bit.
What do you do for the sellers? Sellers.
Yeah, I was telling him, I was like, that's why I did buyer team. And then he was asking who else still has like normal jobs. Like shows, so I'm definitely IT, Bobby, I'm good Bobby things. And then I'm just coming to all things. So, and then that just got noticed. Yes, I got you. So you don't get it. That's why you listen to comments sometimes to like put stuff around. I help out a little.
Yeah, on the daily, yeah.
Honestly, when COVID started, is when I started like looking at everything.
So what do you got?
I know the difference at the beginning. Like, I'm no cheap for the RTA. I don't think so now. Yeah, it's good. How did you guys meet me? How did you meet me? So there was another group called it was like there was a lot of people.
Folks, is networking right now. 4 minutes till we active. I'm sure you can hear them talking about the contracts and all that kind of stuff, analyzing the charts and all that kind of stuff.
Yeah. So I like hung out with him more, and then like things happened with Golden Banks, and I was like, I'm thinking with you. I was like, what's the other guy? And then we helped each other get organized.
Finally, some peace and
You
quiet.
might as well share the screen.
Yeah, no. Wait, we still got a couple minutes. You can. I think it's good that you're showing that as well.
Yeah? Where at? Let's go. Your primary or your rental? Rental.
Yeah, this is my third one.
Okay.
That's partially why I didn't.
Real estate.
I didn't teach you guys.
I have to hit you up and learn how to do real estate.
That's not your one.
I'm sick of water.
Send it this way. That's ours. I want to draw my fit.
You know how to draw?
Yeah.
I know how to draw.
Someone was asking yesterday about the fibs, and I was
Well,
like,
I go based on show. But
yeah, sure. He know. Sure enough, know how to draw the fibs, but that's not really my stuff.
But he does it all. That's what he does.
Why is that? Does it like not change though? Like if you
So we look at it, well, based on this,
based on the day?
we look at Tracy at 50%. That's where he look.
Yeah.
That's what he looks at. He has like a checklist. Like it has to have a retest around the 50. Then it has to have the fit has to be 50% retracement. And then like there's
Okay, so what's if you trace that 50%?
well, so that's like all right. So here this is how much you were drunk, right? 38, 18, right? So 38, 18, we're around here, 30%. So here, 50% is where you kind of look at entry. You see how that lines up.
Everyone gets notifications.
So this let's say we get
Everyone gets what?
Everyone's getting the same notifications from the group.
and you're on this.
Like if I put add everyone.
Which EMA is your best?
So this one.
Alright, it's 20.
This guy has a fix. That's not 20. Show knows it fits.
Is it fun? When you gotta call in?
Yeah, that's the 50. It's a 40. Not all, he operates off the 50. He operates off the 9, the 21, and the 200. You know what I'm saying? So he would probably go around here, which is not bad. But to get it right here, we're around 5% retracement. We're at 50%. So 50% is $34. So it's 34.3. That's 50% retracement from the high. Right? Now, that's where the highest point would be. But we can do this too. Maybe that's too far out. Maybe we just put it this. Right? So we can leave this here.
What the people that came out last night is still asleep, I guess.
That's why
That's why I
worried about that.
That's why I was like, man, you're starting the next one at 11.
Drink that much.
That's what I'm talking about. They was with us stuff. They were smoking up.
That don't get you fast enough.
You got shirts?
You know, we got everything right in. How did you do the flips? I think he had a session. Show had a session with Mommy.
Yeah, so we had the first session.
I sat in on one of them recently.
But I didn't get to listen to the other one. I know he said he mentioned the week. That's it. He draws it on there. So 21 is at 34.61. And 50 is at 31.58.
You usually have sessions on Saturday.
Depends. Like I said, you would
Get
it's
it.
like 4 p.m. You want to retest, right? It may still have a ways to go
So that's what I'm thinking.
if your strategy is like, all right, I'm going to get down to 21, I'm going to get to 21 on the weekly.
Okay, just look at this sketch like one of these houses.
Yeah, houses. So we'll draw it here, and we look here and see. Let's see how it looks. Hourly, you make this trend down.
Yeah. Yeah, but it's they're off the little
Yeah.
line.
Yeah. So it looked more like puts.
Yeah.
So we look. So what I was saying, I saw him. I tested it out. Yes, you know. You can do that. I'll tell you my stuff. But tell me what you was telling me. I was thinking. Yeah.
But so the reason.
Yeah, let's talk about that.
So, I got the daily.
No,
It's all the time.
I'm a teacher.
Oh, nice. We share science. That's where
Nothing wrong with that, right? How it's true.
good stuff comes from.
No,
One of them.
no, it was the weekly, daily. My chart is a little bit different.
I got your chart set up here. You want to go to your chart?
Yeah. That's why.
Let me say this. I got a different chart for you. So your chart,
I was like, are you fucking imagine.
your chart looks like this. You're this right here.
Yeah.
They're like, I get paid $1 million. By 95.
Oh, you're gonna hide them?
Yeah.
Yeah. I can show you why mine was a little bit different.
So I'm gonna do this over here. Delete this.
Yeah, Oscar's struggling right now, but it's cool. But I'm not in there, so I'm cool with it. I'm fine with it. But,
All right. This is you right here.
alright.
Because you use multiple
Yeah,
hits,
man.
20, 50, and is it 100 or 200?
Nah, so it's 20, 50, 100, but it's when you edit the settings,
Okay.
so you go to the settings.
Yeah, then you want to go 200, right?
Yeah, that's it. So you got it. Yeah, you got it.
Yeah, this is your setup here.
That's it.
That's your setup.
So this is cool. This is put. That's clear, right?
Yeah, that was Oscar Health.
Yeah. So my price target was 22.
Yeah.
We hit the 22. Look
Yeah.
right. Put your cursor to the 22. Right at the 22, right? Right at the 22.
My word, my
A little bit higher. Boom. We just came back all the way down. And I'm gonna get into it. But those are the reasons why we have price targets. I said in the chat, I updated my target. I said, look, I put up my thing. I said, when Oscar hits 22, the Oscar price target is 22, right?
Once it hit that, we got to be able to get out.
But yeah, now this is the thing. Price target is price target. And on another day, Oscar would have ran to 22. Cool, I'm cool with it. But you see why I have a price target of 22 and of 20?
And I had a price target exit at 21.42.
Okay, so that's my point.
But I got up out of there at that time.
So that's what I'm saying. Look,
And it ran up. I was like, damn.
yeah.
But I got out. I just locked it in.
Either way, I don't know. My Discord ain't. My Discord ain't loading. This is the thing on my phone. Look, Discord now. Trying to load. I think it's good now. Kept jumping out. I think we're good. So this is why I'm saying. This is why it's important. Right, cool. So Oscar can blow through to 22. Right, I said that on the 26th of June. So scroll your cursor a little bit. 26th of June, whatever that was.
So you just gotta
All right, cool. We was at.
find something.
Yeah. So
Right here.
So somewhere here, scroll up. So like 1950, I think, to the candles. Yeah, one back. All right, so we were at 1954, right? So I had like a $3 jump in my price target. I had like a $3 run to get to my price target, right? Now we
How do you know it's gonna be a $3 run?
That's my
those runs.
Yeah, get that from like looking left.
yeah, looking left, and I'm gonna see its support and resistance. Now, 1st of July, obviously, we hit the 22, right? I put it in the Discord, told everybody. Now, I couldn't predict this this next thing,
No, for sure.
but that's why you got a price target, and that's why you stick
Get
to
on
it.
your price
That's why I put it in there. So, you know, the joke we always make when people say, "Are you still holding? We still holding?" That is real though, because
once it's the price target, it's up to you.
it's up to you what's going on.
So you got to manage it.
As you can see in the tab, also to 22, we hit it. Now on another day, like I said, it goes to 23 or whatever. Cool. This time, what happened?
You know what?
See?
You know what?
Yeah. You see?
Once it's, I'll run it up the call, right? But once it's the price target, I'll put a small foot.
That's smart though.
Because I was going to do it anyways for insurance.
That's right.
I'm trying to take profit there.
Yeah, that's why I was
You lock it in.
I lost profit and I was done. I just ignored it. I was done. But the next day I seen it was at like 18, and the next day like something else, and people were like, "Oh, are you still in?" And I was like,
Nah. So people still in it.
So that's why it's a joke that we say. Yeah.
Because here's the thing. For me, from my perspective, I'm busy, right? So I'll get in. I'll probably get on a call. Let's say at 3 o'clock the day before, whatever. I'm probably working. I'm got, you know what I mean? By the time I get in, I'm like, oh, you probably already got out, or you already hit the PT, but I didn't see that. Even I get alerts too, but I'm not probably in a meet. I can't close out. I can't. You feel me?
Exactly. So that's what I'm saying. People don't. Like, I could never predict this. Okay, I'm not saying I predicted this, but my target was 22. I said, yo, this is hit the price target. We've hit 22. Like we've hit. That's
what we gotta know. Once they say a price target,
Nah, at that point,
go for that price target.
Right. So when the next, I think 3-4 days later, people were saying, "Oh, we still in Austin." I said, "Bro,
I got killed in CoreWeave, dog.
Yeah, that's
I
why
got murdered.
CoreWeave, me too. I got killed that one.
Bro.
I was up though. I was up. I should have just took profit, bro.
That's the thing. It's not easy, right? Because like what happened here, we hit the price target, and some other people were saying, "Oh, it might keep going," because it's been going. It might keep going, so they get greedy and stuff.
What if you drop down to a lower time frame? But then it's still like it could be like a it's tough.
It's still a tough one.
You always put your entries on a 1 hour, right?
Yeah,
because you checked
it about yesterday. Did you hear that from the live stream yesterday, or you knew that?
No, I didn't hear that. But it's also
for swing trading, you put your entry on 1 hour.
Yeah, I look at the 1 hour and get I'll be honest, the exact precise entry is probably the 15-minute, but it's not really relevant. The 1 hour is really for swing trading.
Okay.
The 15 minutes just if you want to get in at like $1 instead of $1.25, $1.30. Yeah, something like that.
So that's what I have to learn. Like day trading, I use the 1 minute, 5 minute, 15 minute, 30 minutes as well. But the swing trading, I haven't really mastered that as well. So that's why I just kind of like say the day trading right now. You feel what I'm saying? But I know swing trading, that's your thing. You be killing me. But you make crazy gains.
Yeah, we talked about it yesterday. We're going to talk about it. In fact, let's get into it. Let's get into it. All right, folks, let's get into it. Let me stop the mirroring. All right, let me start sharing as well. Let's get into it. Let's answer all the questions. Some people that like to get food and stuff like that. We're gonna take a break in like 45 minutes anyway. All right.
No, it's not yet. They understand what the thing is. The medical school, of course, they have. If you understand from most hospitals, they have one of the medical school. Of course, they have housing already. Yeah. So,
I'm on. You on the app? You on YouTube? But you're mirroring them, remember?
Yeah, but I want. No, I'm not mirroring on yours anymore.
Yeah. So you saw on YouTube.
Yeah, I just want to see what it looked like. So I'm sleeping.
They provide housing. How did they do that? They provide housing.
I was like, you see, like that's gonna happen. I'm like,
All the school would be like,
I'm like, oh no wonder. I'm getting new type of
Yeah.
I'm like, what are you trading
for your students.
Yeah. Just make sure
But go back to what I was talking about. So I found the real estate agent and let her know that situation. She's already
1 hour.
So
One
she
weekly.
put me onto
And then the day.
That's
how we do it, right?
Yeah, she knew.
Well, 1 hour.
For interest.
Not so rigid. If you just call random
1 hour.
mortgage
4
lender,
hours.
they'll be way more rigid because they don't know you, they don't know.
You want to hold on.
They're just like, there's no
Weekly?
rules to it. And just-
Get an overview, weekly overview.
So this
To get an
guy-
overview. So we work from bigger time frames to lower time frame. Weekly is to get a bigger overview.
To get the structure.
We'll get into it, but weekly, then daily, then 4 hour, and then we want to enter the 1 hour. But the weekly is to get the overall overview of how the weeks have been going, right? The trends. All right, so yeah, go for it.
So when you, let's say you get something like that,
No, I never.
Yearly view.
yeah, so
Yearly
basically,
is
when you tap into the yearly,
Yeah.
it's like how you say weeklies or overall, you know what I'm saying?
so yearly overview might be for the long-term investor.
So like the ones that's on, you know what I'm saying, on cash flow.
Like if I show you this,
If it's short, like to do the puts,
Mhm.
long-term call.
Yeah.
That's like the yearly overview.
Not even. I wouldn't even. I mean, yeah, I'll go with the 3 month or the 1 month. Yearly is so big that the 3 month will tell you enough. 3 month will tell you enough. There's a 3 month candle that will tell you enough. The yearly is so big. I'll only use the yearly if I want to see how much this was 4 years ago, 5 years ago, 6 years ago. If I want to buy
Shit
it,
has changed so much.
yes, yeah, exactly. So let me see. All right, cool. I think they're good to go.
And this is the thing, that property was right next to a community.
All right, cool.
The property I got was 2 bed, 2 bath. And that's one thing that, if you take anything from what I'm
Well, a couple people are gonna get food, but it's cool. We can start slowly and build into it. All right.
Because it's very hard to rent out a 1 bedroom bath and still cash flow.
All right, we're gonna get into it now. I mean, a couple people is on their way and stuff. That's fine, but you know. So first and foremost, I know one of them is not here right now. I mean, as in he's in Miami, but he's not here right now. Either way, we got Danny over there. You guys know Danny. You know, showing off J Money, Miyagi, who's somewhere in the hotel, and Kiara as well. Yeah, she's down here. She's like 2 hours away. He's not here. He's in the hotel.
Yeah.
Not here. Should be here.
Yeah.
We're gonna get him to move sometimes. We're gonna find him.
We're gonna get
him.
Bill.
All right. So a little bit overview. I'm gonna talk about kind of my journey, the usual stuff. You know, how I started, why I started, that kind of stuff. What made me want to help you guys and that kind of stuff. The ups and downs. You know, we're gonna go through some wins, loss, positives, negatives from recent times. We'll talk about the reality of options, life, trading, all that kind of stuff, and then long-term wealth as well. But to kind of get things started, right? So when it comes to, we're just talking about the long-term game right now, right here. When it comes to stocks and you know, investing, everybody kind of talks about the index funds, the basket of, you know, collection of stocks, S&P, NASDAQ, all that kind of stuff, right? Now, with those things, they always tell you to shoot for 8 to 12% per year, which is fine if you're talking about, you know, regular returns. It's fine. You get, you know, if you get an increase on your money, that's cool. But there's a whole other way to do things, which is what, you know, I teach, I talk about, I like to do, and that's finding those great companies, you know, with the long-term wealth, the long-term potential, those growth stocks, you know, those SoFis that go from $6 to $20, or the Palantirs that go from $16 to $145, or the AMDs that go from 60 to, you know, 150, or the NVIDIAs. Those are the ones I like, right? Because 8 to 12% per year is cool. It's fine. Nothing wrong with that. But that, you know, there's more out there when you know what you're doing, right? And then diversification. So diversification is like what everyone will teach you if you take financial classes. They'll talk about diversification, or if you listen to a YouTube video. That's fine, but it doesn't always have to be that way. If you're going to go purely off tech stocks, you can still make 20, 30% returns per year if you do it at the right time, the right entries, all that kind of stuff. If you're going purely off
financial companies, the JPMs, the Wells Fargo's, Bank of America's, you can still make, again, 20, 30% per year, or over a 5-year period, 30, 40%. It's not too difficult when you know what you're doing, you know what you're looking for, that kind of stuff. So I've got these 4 stocks, and we're gonna look at Eli Lilly and Robinhood in a second, but Meta, Tesla, Nvidia, right? Meta was $90 in 2021 or 2020. It's now $750 today, right? That's a 6x, 7x. When think about how, again, I talked about 8 to 12% returns, right? If you take a financial course at school, they're going to talk about, again, shoot for 12% returns. The S&P on average over a 5-year period returns 12%, that kind of stuff. So yeah, you can put all your money in a QQQ or a SPY or an IWM. That's fine. But when you know how to find undervalued stocks, which are, have huge potential, Tesla, Nvidia, AMD, and Meta, all the ones we just mentioned, SoFi, why not do it, right? So let's talk about how to do that. Let's talk about Eli Lilly as well. So let's look at Lilly right now. Over the last 1 year, it's down 15%, right? It's down 15%. So it looks like it's a bad stock. It's not a great stock. It's one that you want to short, all that kind of stuff, right? It doesn't look great. Now, anybody trade Eli Lilly? No, okay. Now it's kind of a tough one to trade, right? So 1 year, over the past year, it's down 15%, right? Okay, cool. Here's the thing. And this is why I say keep a long-term perspective. Look at the last 5 years, right? Now what do we see? It's up 380. So a stock now was a bad stock. Now we just call it a good stock, right? So again, if you know how to buy or find this at 140, 145, wherever you bought it along the way, if you know how to find it and buy it at that level, why wouldn't you? If you know that over 5 years you're going to get 380% return on your money. This is almost an $800 stock. 4 or 5 years ago, it was a $100 stock, $150 stock. Again, it's just about finding the right opportunity, right? It's kind of like the same with, you could say, real estate, housing, right? Something could be a bad house, but if it has the right potential, the right appreciation potential, the right, if it has the right number of rooms, the right location, all that kind of stuff, a bad house is not necessarily a bad house anymore, right? Same with stocks. Just needs to find the right place to put your money in for the long term and get that return. So yeah, we'll talk about that. Like I said, I think a lot of people get confused about, or not even confused, the daily noise, the weekly noise just kind of knocks them off their perch a bit and kind of confuses them, right? A bad stock is not always a bad stock until 5 years later when you see it's up 20, 30, 40, 50, 60%, and you realize, okay, it's not a bad stock, right? 9 months ago, 9-10 months ago, SoFi was a bad stock because it was $6. SoFi was $6, $7, $8, and it was a bad stock. It was a cheap stock. It was no good, this and that. Now it's $21. Suddenly everyone wants it. Suddenly it's a great stock. Suddenly it's a great company. So in the space of 10 months, SoFi, that was $6, went from $6 to $21. Huge jump. So Meta all time, you can see it's up 1,600%. That's pretty impressive, I think. If you put in a couple dollars, you get 1,600% return. That's pretty impressive. Tesla, even bigger returns, 2,300%. They also did a stock split, so I don't know how that skews the numbers, but either way, it's up huge. They suffered a lot in I'd say between 2017 and 2020 because you know how Elon is, and you know how people's expectations for EVs was not really that high until maybe around COVID time. But yeah, again, all of these are opportunities. People that bought Tesla stock for $5, $6, $7, they're eating good now. And of course, Nvidia, right? So this is a big one. Nvidia. Until 2023, end of 2023, it was another one of those weird. It's like, yeah, it was split as well. It was one of those that no one was really interested in. It was $30, $40 a few years ago. Went to like 800.
I got it at 26.
You got it in 26, yeah. And it ran to like 900 last year before the split.
I got 1,200%.
How much?
1,200%.
Oh yeah, okay, there you go, 1,200, yeah. But that's what I'm saying. Like, none of these, like, this could have been one of the stocks you bought 18 months ago, or not even 18 months, 2 years ago, and you would have got crazy returns from 2 years ago till now. If you had bought it 4, 5, 6 years ago, whatever, you would have seen insane returns. And then, of course, like I said, Eli Lilly, right? Eli Lilly, back in, and I know we weren't really trading back then, of course. Back in early 2000s, it was like what, 20, 30, 40 bucks. Now it's 800 bucks. So again, I think the idea I just want you guys to understand is, you might have thought sometimes you missed a stock, you missed a play, you missed this and that. Not really. And then, especially in this day and age where there's so many growth stocks, so many stocks with, high potential that are undervalued right now, there's opportunities out there. So we'll talk about how to find it, right? So we kind of discussed this yesterday briefly with SoFi. I did a swing trade with this from July 3rd to yesterday. So obviously you got 500% return. The point I want to make with this is not because you want to chase 500% return. That's not realistic. Like recently, it's funny because the last 6 weeks, if you're in the Discord, we hit a 500% return every single week. That's obviously not really realistic long term. But what you can realize is those same stocks that are running 500% here and there, I mean, you're making money on your options. Also look at what the stock price is doing. So when I bought the SoFi calls 2 weeks, July 3rd, SoFi was around 17 bucks. Now SoFi's at 21 bucks. So even if you just bought a bunch of shares, not even the options, you bought a bunch of shares at 17 bucks and ran it up to 21 bucks, that's still some profit in such a short period. Now I'm not saying you want to take that profit right away, but longer term, think of it. If SoFi can go from 17 to 21 in 8 days, SoFi can go from 17 to 34, 35 in a month, 2 months, 3 months as well. So again, it comes back to the mindset, how you think, how you trade, right? And so here you can see I had 2 contracts left yesterday. I started out, the first order I put in was 18 contracts. It didn't get filled. I got 5 contracts filled. Once SoFi ran about 150%, I sold 3 contracts. I did that. Does anyone know why I sold those 3 contracts? Take profit, price target, trim, and leave runners. Now, this is how most people trade, right? They buy those 5 contracts, same way I did. They see the 100%, 200%, 300%. They still hold it. In this case, it would have paid off. That's fine. Next time, when it goes 100, 200, 300, it's also going to go 200, 100, 5, negative 20, negative 30. So, like you guys said, I took profit, left the runners. That's fine. It's not like it's the end of the world because I missed out on the rest, right?
The runners, you move the stop loss of the runners.
Yep. So you often see in my tab if you're in the Discord, new stop loss this, new stop loss that, just in case in this case SoFi decided to drop back down to specific price points, that kind of stuff. But yeah, take those runners, use them.
I wanted to add as well, in regards to trading options, the way we're doing it, you have to remember that the stock market is not your friend.
Yeah.
They're trying to take your money as many times as they can. So when you see that 300%, like Prince is saying, do not hold on to that as long as possible. You need to get out as soon as possible. Because like you said, as quickly as it can get to 300%, the stock market is going to try to get you back down to 0.
Yeah.
So that 300% is beautiful. Take it and run it.
It is.
Move on to the next play. That's what we're here for. We're here to provide you plays consistently for as long as you want to be.
Exactly that. And I mean, if I look at what you guys wrote down on a piece of paper yesterday, what you're trying to learn, right? So, first point here is knowing when to hold after seeing profit. So, one way to make it easier for yourself is have multiple contracts. I know it's not always possible, but if you can get at least 2 contracts, it makes it easier to maneuver. It makes it easier to manage your trade because obviously you can lock in profit after one and have fun with the other one. So I think we talked about it yesterday, I believe. Having the 2-to-1 ratio is really important. So the 2-to-1 ratio is I'm going to take profit at 50% and I'll happily take a loss at 25%. I'm going to take profit at 40%. I'll happily take a loss at 20%, right? The last week, I think July 1st, beginning of July, I wrote in a Discord, what's everyone's realistic expectations when they want to get a return on the stock, right? And you hear all sorts of numbers, 30%, 40%, 60%, whatever. But realistically, whenever we're up 30%, 40%, 50%, 60%, people are not taking profit at those levels. So that's why I'm wondering, what realistically do you want to take profit at? I think there's a lot of you in here who can definitely agree with me that you've been up 70, 80, 90% before, and you end up losing on the trade somehow, right? It's happened to me. It's happened to all of us, right? I think that what that goes to show is we always want more. We always want more. We always want more, and it's natural to want more as humans, right? If I just held from this to that, if I just kept all my contracts, if I just not sold, if I done this, it's always if I done. Realistically, that's never going to be the case. You're never going to always buy at the bottom and sell at the top. You're never going to always take profit at the exact right moment. You're never always going to put the right amount of money in each trade. And that comes down to just how life is in general, right? You're never always at the right place, right time. With options, we're risking $1 to get maybe $2, maybe $3, maybe in SoFi's case $5. That's great, that's fine. But we're also risking that $1, so that $1 can become $0. Realistically, it can. We don't want it to, but it can become $0. So understand that there's always a loss. There's a risk potential because we could lose money. Now, we're going to talk about some charts and stuff like that later on, but I want everyone to have a trading plan, a strict trading plan. So we talked about why I sold 3 contracts of SoFi. It hit price target, I trimmed, I kept runners, locked in profit. That's the plan. Entries and exits are important, right? If somebody's doing a call out, so me, if I'm doing a call out or whoever you're taking a call out from, if I'm doing a call out and I say I'm buying this option at $150 per contract. Now, if it's fluctuating a bit, going to 150 to 160 to 140 to 130, if it's fluctuating a bit, your entry is critical because if you get in higher than me, when it runs up 5%, I might be up 10%. When it comes down a little bit, I might be only down 2%, you're down 10%. The entry is really important. So you need to understand the chart and kind of, make a little bit of a correlation between the chart and what you're trading, because if you see that something shoots straight up 5 minutes into open and I'm already in the calls or whoever else is already in the calls, you might be chasing. If you're chasing, the likelihood is if it pulls back a little bit, you're going to be down, but other people are up. So the entry is really important. The exit is just as important as well. Because again, if you're holding on to something that's up 80, 90%, and the next day you come back and it's down 10%, now are you going to exit at minus 10% or are you going to hold until you're up again? But again, instead of being up again, you could be down even worse. So again, it's like having a criteria. What's the max loss I'm willing to take? What's the max, level of returns I'm trying to get? What's the max percentage of returns I'm trying to get? So you've got to know your entries and your exits, right? You can't be that person who's new to trading, and then you're in the stock play and you're asking, when am I going to exit? Who's holding with me? Are we still holding? That doesn't exist. That doesn't make any sense because if you don't have any kind of plan, right? If internet goes out or Discord goes down, are you just going to hold the stock? Are you just going to hold the option and not know what you're doing? Right? That doesn't make any kind of sense. So you got to have an entry plan. You got to have an exit plan, right? I'm going to enter at this point. Oh, he's up 20%. I'm not trying to enter when he's up 20% because if he's up 25%, I'm only up 5%. All right, he's up, 50%. I'm going to enter now? Nah, because he's trying to get 60%. Why am I going to enter when he's already up 50% when he already said he's trying to get 60%, right? You need to have a strict plan and you need to follow it. There's about 4,000 stocks out there, I think 4,000, maybe even more. You don't need to trade everything someone else trades, right? Yes, we do call outs, but at the same time, there's so many other stocks, so many other plays. Just take your time, just trade what you want to trade. And obviously, have a plan with it, If I put out a trade right now, right, we all might get in that trade at different prices. So the funny thing is, if we all get in that trade at different prices, we might be happy with 20%, some might be happy with 40%, some might only want 10%, some are not happy unless they get 60%, 70%. But if you have no idea what you're doing, then you're going to end up losing somewhere or another. You end up losing because either you lose money or you end up losing because the next time you're in a trade, you make a mistake because you don't know what you're doing. There's so many different ways you end up losing. So, just be smart and just have an actual plan. And then position sizing, right? Risk is really important, right? A lot of people have $1,000, $2,000, $3,000 accounts, and they put in half the money in that account in a trade for no reason, right? Somebody with an account where you're supposed to take 2, 3, 4 contracts is taking a trade with 10 contracts, and the contracts expire tomorrow. That doesn't make any kind of sense. So you want to position size. You want to put, if you got a $10,000 portfolio, I'd say $500 is around right, correct? $1,000 max, so 10% really max, but I'd say 2 to 5% of the total capital is cool. There's a reason you don't see me putting in 5K, 10K, 20K in a play. There's no need to do that. You risk it so much for no reason. And when you risk it too much, it messes with your mental, it messes with your strategy, it messes with how you trade, it messes with a lot of different things. So again, I recommend, it's up to you obviously, but I recommend 2 to 5% of your portfolio and really max $1,000 max, right? With the right trade, that 2 to 5% can double, can triple, whatever. If you manage it well, it can do a lot of things for you. And even if it doesn't, it's okay. If you lose, you lost 2 to 5% of whatever you put in. That's okay. But again, risking 50% of your account and then taking a huge L, that's gonna mess you up not only financially but also just having an actual trading style, right? Because you're going big, you're going all in. It's all or nothing. If you've got a $10,000 portfolio, you put in $5,000 and it goes to 1,000, you just lost 40% of your portfolio. You go from 10,000 to 6,000 now. That's a crazy deficit, right? It might put it this way, because in trading it's a bit difficult to really have perspective. Put it this way: you put in $10,000 into your bank account, and within, let's say, less than a week, right? I'm being kind. Less than a week is now 6,000. Without you actually spending it, you're gonna be like, what's going on, right? Now think of it this way, because a lot of people do this. You got $10,000 in your bank. The next morning, it's at 2,000, 3,000, 4,000. You're gonna feel horrible, right? And a lot of people do that. It sounds crazy when you put it that way, but a lot of people do that, but they just do it with the stock market. I've seen crazy accounts, right? People always reach out saying, this is what's happened to my account. This is what. Think of it in real life perspective. If you're going outside, tomorrow with 50,000, and I've seen this, $50,000, and you're coming back, a week later with 3,000, 4,000, 5,000, that doesn't make any sense. You just blew 45,000 just like that, right? So again, risk 2 to 5% of your portfolio, and max, 10% if you know what you're doing, especially. And then, like I said, well, for those of you who were here yesterday, journal, right? So this is where I was journaling, back 2018, right? Buys, sells, that kind of stuff, right? Profit taking, what I did wrong, what I did well, let me quickly find. And feel free to interrupt me if you've got questions along the way, right? So here we go. So I wrote, this is actually what I wrote down back in 2018. So I got important questions. I said, why? What type of trader are you? Do you prefer fundamental, technicals, or both? What's your trading routine? What times do you trade? What specific time frames do you trade? And what is your criteria for getting in a trade, right? I wrote this down for myself 7 years ago. And you got to ask yourself those kind of questions, right? Nothing wrong with taking call-outs. But again, you want to learn how to fish, right? You don't want to be given handouts. I have another page right here. So just the vocabulary, right? Again, trading journal is cool. I think if you've got a laptop, you should. I'll give you guys a spreadsheet just to calculate those kind of things. You've got a laptop, you can do it that way. You can do it by hand, pen and paper, whatever. But it's important that you journal. You understand, what you're doing. You understand what you're looking for and how you trade. And then I've got, you can kind of pass around actually. I'll let you guys pass around. But this is my journaling from 2018.
Those questions you wrote down, we could probably put that in the Discord.
I'll probably take a picture of it and just drop it there. Yeah. Yeah. But so I'm just passing around the journal now. That's my very first, I think that's my very first trading week, February 2018. Just, how much you starting with? First day, end of the week, that kind of stuff. Yeah, guys, I would say yesterday you saw it already. But yeah, I started with $75, scaled it to about 400 in a month or two, either way, and then lost half of it next month, right? So I journaled it, so I knew what I was doing wrong, I knew what I was doing right. Oh yeah, and then let's talk about reinvesting the profits, okay? some of you will hit good on a trade, hit big on a trade. Google is a great example this week. We hit good on Google, we hit big on Google. Now, what I like about those kind of trades is everyone realizes how you can actually make money in the market and how rewarding, how lucrative it can be. What I don't like is people forget that long-term plays are also a thing, right? Google shares might be expensive, $187. Google shares might be expensive, but there are people in the Discord who made a couple thousand. Why not grab 5 shares of Google for $500, $600, $700, right? Why not grab a few shares of Google? Because when you reinvest those profits, not only are you getting shares at a discount, you're also gradually building up your portfolio. So compound your returns by, taking profit and then putting it back into long-term plays. So for those who was here yesterday, who saw what did we do yesterday? What did we do regarding the SoFi profits? What did we do in regards to the SoFi profits?
We exercise.
Right. So
took profits with us too.
yeah.
One has a running.
Right. So what was the reason that I bought those shares for SoFi?
For longevity.
Exactly. So when we come back, so for those who wasn't here yesterday, I bought SoFi shares for $18.50. I bought 100 shares, and SoFi is at $21 right now. So if we come back in 6 months and SoFi is at $25, $30, whatever, it could also be back at $10, who knows? But either way, let's say it's up further from where it is right now, I'm going to be happy that I took money and put it back into the shares for long term. Now, what most people do is they make that money on the options, great. They run it up, it's great. They have that money, and then they lose it somewhere else in a few weeks. Now, if you take a bit of that, let's say you make 1,000 or even 800, you take 200 or 300 just to invest in some shares. SoFi is cheap, HIMS is cheap, Robinhood is relatively cheap. There's different opportunities, right? People will say, I don't have money for shares, but that's not true. There are shares that cost $20. This time last year, Palantir's shares cost $22. You can't tell me you don't have money to invest in long term, right? Options is great. Options is what we love doing. Options is great for the short term, especially, right? We're making money with, getting returns. That's great. If you come back in 2, 3, 4 years and you have nothing to show for it, what were you wasting time doing, right? What were you even trading options for? So again, we traded SoFi, options this week, but we also bought SoFi shares. And, if you're in the Discord, I have a section called long-term growth. If you go back through that section, you will see my buys and my long-term plays. The reason I have that section in Discord is not just for it to be there. I know it's a neglected channel, but it's not just for it to be there. It's really for you guys to understand what I'm buying for the long term and why, right? You'll see stocks in that long term section. You'll see Cheesecake Factory, you'll see Nike, you'll see AMD, you'll see SoFi, you'll see Palantir, you see other stocks as well. I think I've got some HIMS shares in there as well. PayPal in there. You see a lot of long-term plays because those long-term plays are going to be beneficial for me 5 years down the line, 10 years down the line, right? Everybody who bought Palantir last year, SoFi last year, maybe a little bit of HIMS last year, Robinhood last year, even maybe Nike last year, they're eating good now. All of them have doubled, tripled their money just from the shares, right? So that's mainly what I want to talk about in regards to long-term position sizes, investing profits. We'll briefly talk about options contracts, right? Greeks and all that kind of stuff. So with options, you have the Greeks. The Greeks kind of control how your contract moves. You've got Delta, Vega, you've got Theta, Rho, Gamma as well. So let's say you're trading options and your contracts expire next week, Friday, July 18th. As the days pass by, so all options are exponential, whether they expire in 2 years or now, all of them are exponential. But what that means is over time, they decay, right? So if you got contracts expire next week, 18th July, right? July 18th, Friday, July 18th. As each day goes by, right, no matter what the stock is doing, your option is going to lose value due to time decay, theta. So there's a reason they always say buy time, right? When we buy an option, we want the contract to move in our direction. It could be up, it could be down. If you're trading puts, it's down. If it's calls, it's up. But we want to give ourselves enough time for that move to happen. Sometimes that move is going to happen, but it's not going to happen as quick as you want it to. So you buy time. The Google move that happened yesterday was great. On another day, another week, another month, that Google move, instead of happening on Friday, it could have happened in 2 days, on a Monday, right? So yes, we made a great trade yesterday. I said Google was my price target, $180, great. That happened. It's not always going to happen, right? On Thursday, someone asked me, what's your price target for Google? I said 178 and 180. He said Google by tomorrow. I said easily. Sure, it looks great when it happens. On another week, it might not go to $180. Another week, it might go to $180 in 2 days or 3 days or 4 days, right? This time it happened overnight. Cool, that's great. But there's a reason I say buy time. When you buy time, you give yourself enough time for the contracts to do their thing, for the stock to move in its direction, for the stock to move the way you want it to move. Until you're, I don't know, I'd say until you're very, very close to expiry, you might not understand why I'm saying this, right? If you buy on Monday and your contracts expire Friday, you might be like, oh, well, I've got 5 days, it's enough time. Until you get to Thursday and your stock hasn't moved in your direction, you won't understand why I'm saying this. So even if it's a Monday or a Tuesday, give yourself a couple weeks, give yourself 3 weeks, give yourself some grace. There is enough opportunity in the market, but again, it might not always move in the way you want it to by the time you want it to, because that's just how stocks go. So be careful of theta. Theta is going to eat away your contracts. Theta is less the further out you go, but it does mean the options contracts are more expensive. So that means if I'm buying for July 18 on Apple stock, the contracts might be $100. If I'm buying for July 25th or August, the contracts might be $200 or maybe $300. It just depends. But there's a reason it's more expensive. It's because you're buying time and your option is more likely to move in your favor by that time, right? You have more time for it to happen. We'll talk about liquidity risk, right? So liquidity risk. I think a lot of people will see stocks on social media, on YouTube, wherever, Discord, Telegram, whatever, and they'll want to get in and they won't really know what they're doing, right? They'll buy, let's say we've got Nvidia right now. Nvidia's like $160. They'll buy a $250 call for Nvidia because it's cheap, and even though it expires this Friday, the contract still, it still needs to move in their favor. It doesn't have to move to 250, but either way, my point here is they might buy a $250 call for Nvidia for this Friday. That's like $90 out of the money. So why I'm bringing that up is because in those kind of situations, there might be a big wide spread on the Nvidia calls. Why? Because nobody's really buying $250 Nvidia calls for this Friday because, again, that's a huge number out of the money. And where I'm going with this is the spread. The spread might be crazy. So what I mean by the spread is it might be difficult for you to get out of a trade. If you're down, it might be either the contract's at like $3, then the next day at like.
Can you talk about what a spread is?
Yeah, so it's the difference between the bid and the ask. So every single contract has a bid and an ask, right? Someone is buying it, someone is selling it, right? The bid is how much I want to buy it for. The ask is how much the seller is offering it to me for, right? So we can actually go into Robinhood. Let's say we want to trade Eli Lilly. Over here. Here's the bid and the ask, right? I don't know if you can see it from there, right? The bid, 1075 is the bid, ask is 1130. So the spread, it's not crazy. It's a $45 spread, right? It's not crazy. But watch this. Here we go. Look at the spread on this one. So on the $1,200 calls, $1,220 calls, the bid is $0. The ask is $2. It's a $200 difference. So this is what I mean. If you're trying to, so these guys that have these contracts, they're trying to get out of this play, right? Realistically, open interest is 5. Realistically, it's going to be hard to sell those because no one's going to buy 1220 Eli Lilly calls for this week Friday. Reason being, it's at $700.93 right now. These calls are $430 out of the money, right? Is Eli Lilly going to move anywhere near there in the next few days? Probably not. So the people who bought these, they could have bought them. It doesn't mean they bought them this week. They could have bought them a year ago. They could have bought them 6 months ago. But either way, they're getting to the point now where they're like, oh, my option's expiring this Friday. I'm trying to get out of this trade. No one's trying to buy it. This is a terrible spread, a horrible spread. And this is why I say you need to buy what's realistic, right? If these people bought these 7, 8, 9 months ago, cool. It's okay. We don't know what the stock's going to do, right? If they bought it 3 weeks ago, a month ago, 2 months ago, then it's like, well, what are you doing, right? What's making you think Eli Lilly's going to jump $400, right? And now we're at, July. Today's July 12th. we're a few days away from July 18th, and they're probably panicking trying to get out of this stuff, right? This probably ends up worthless by Friday. You know, no one's really trying to buy that. So the spread is really important, right? We just saw a $45 spread and we saw a $200 spread. Obviously, we know which one we prefer, right? Same for puts. Let's look at the puts. Realistically, let's say a $500 put. It's okay. Here we go. So this is a $430 put. So Eli Lilly is $793 right now. The people who bought puts was thinking it's gonna drop, you know, way lower than it is right now. The ask is $249. The bid is $0. No one's buying this, right? No one's buying this. So that's it. This stock is not gonna drop to. It's not even gonna drop to 600 in the next week, right? These guys have got the 430 puts. Volume is 0. No volume on it, right? And
So to add on, when he was saying in the beginning where you might get stuck in a plane, you can't get out, like you can't sell it away. And a quick way to determine if you will be able to or not before you even buy it is that volume number and that, I think the number right below it, but
Open
the
interest.
volume number. If it's not very high, like let's say 100 on some stock, that means there's only 100 people that are willing to like play with you.
Yep.
Like buy and sell that option that you're playing with, or that you're playing on with. Now, if you were to go to AMD, you would see the volume on many of the contracts within the thousands.
Yep.
So that's why you know that your liquidity is very good. Because there's thousands of people playing this stock. So if you jump into this into AMD, you're guaranteed more likely than not to get in and out. Whereas things like Lilly, depending on what kind of contract you get, you might get stuck in it. There's not a lot of people are playing.
Exactly.
It's exactly why SPY is very intriguing to people like big money, because SPY is the number one thing on the stock market. Some people just play SPY, just like big money. So you're guaranteed to get in and out on SPY alone, because there's so many people staring at that one stock.
We'll look at AMD options. Right, see, look at the bid and the spread. How close are they together? 164, 167, right? That's a close spread. If one was like Eli Lilly, 200, and one was 0, huge spread, right? Bid and ask. Trying to buy for $64, trying to sell it for $67.
It was what, 16 cents each dollar, right?
Yeah. So each time AMD goes up by $1, so it's 146.28 now. When AMD goes to 147.28, you expect about a 16-cent move, $16 move.
Isn't the rule of thumb set around 47 cents?
Yeah, 47, 50. I mean, around 50, really, around 51. So the closer you are to the money, the better the delta will be. This is a $155 call. Realistically, AMD is not likely to be at $155 this week. I mean, if it does happen, it'll be great, but it's not very likely. So if we go closer to the money, there, delta's 43, 44, 43.66, 44. Delta's much better here. So,
Spread's still tight too.
yep, 246, 242. That's a decent spread. Cool. Yeah. And I talked about this yesterday, but I'll just briefly touch over it again. If you're trading and you're not studying, you're not learning, you're not, researching, you're not doing anything, long term it's going to be difficult for you to succeed. Reason being because, let's say you take call outs or you gamble or you whatever, it's not really a strategy, it's not really a plan. Long term, it's going to be difficult for you to succeed. I mean, everyone has their own way of doing things, but just with doing everything without learning at all, with no studying, no charting, no research, long term, it's going to be difficult for you to sustain, right? I'm sure most of us in this room have traded while just doing anything and just hoping for the best. I'm sure. I mean, I've done it. You know, you just put your money in and then hoping it goes, you know, to this and that price. Realistically, that's not a strategy. That's not long term. That's not going to help you actually succeed in the markets. So use whatever, you know, available to you, whether that's YouTube, free videos, whether that's courses, whether that's a Discord, whether it's a PDF, whether it's a guide, whether it's study material you found online, whether it's Udemy, whether it's whatever. Use those things to your advantage, right? Use these kind of meetups to your advantage, right? Ask questions, learn, study, take something away, take down notes, you know, all that kind of stuff. Use it to your advantage. And then, like I said earlier, start small, right? Start small, like 800 to 2,000 bucks is what I consider small. I've heard people say they're starting with like 3,000, 4,000, 5,000. That's fine, but when you're doing that, you're not starting small. There's nothing wrong with it, but you're not starting small. So I'm saying I think you should just start small. Nothing wrong with having the capital, but only using a bit of it to trade, and then you can grow gradually, right? When you know what you're doing, it makes it easier, right? If you start with 5,000, you lose half of it, you're going to be discouraged. If you start with 800 to 2,000, you lose it. Personally, I don't think you're going to be as discouraged, and I think it's going to be it's a reasonable amount to, you know, lose or take L's on without, you know, feeling like you've done something drastically wrong.
You lose your confidence a little bit.
A lot of confidence.
I got Robinhood. I got the capital there, but I'm doing what you said. I'm going real small. I'm real conservative. But I'm thinking swim on just gambling in a sense, and then you see like you're down $1,000.
That's it.
You know,
That's it. That's the problem, right? So, you know, start. You know, nothing wrong with having the capital. But I've seen newbies who have 10, 15K, they want to start, and it's risky business. It's risky business because you're going to think, I'm going to take this money and I'm going to flip it to 50, 60, 70, 80K. Realistically, it's possible, but as a newbie, it's not likely. So yeah. And then participate. If you don't participate, you won't learn, right? If you don't engage, you won't learn. So you guys are asking questions. That's part of learning. That's part of participating. You guys are taking notes. That's part of it too. You guys are here at in-person event. That's all part of it. So that's good. But there are a lot of people who will keep themselves around. You know, they'll have Twitter. They'll read about stocks. They'll, you know, listen to something here and there. They'll jump into Discord and that kind of stuff. But they don't consume the information because they're not participating. There's a difference between being around it and actually participating, right? All of you guys are here asking questions, taking notes, whatever, listening in. That's great, right? There are people that will just sit online and, you know, they might, like, for example, I do my live streams, you guys have seen it, right? The Zoom calls. People will be in there without really being in there, right? They, you know, 3 hours after lounge closes, they're still in the lounge. So, you know, they were never really in it. You know, that's not participation. If they're, you know, on the Zoom calls, you guys have seen it, they accidentally leave their camera on, they just chilling, you know, in bed like this. You're not participating. So participate, ask questions, right? If you're in a Discord, ask questions. Even if it's not me that will directly answer you right there and then, there's a load of people that will answer for you and, you know, help you out. So ask questions, engage, take notes, that kind of stuff. Do what you can, you know. So we talked about this one yesterday as well. You know, a couple of these we've already went through. But you want to go from a rookie, right, to a seasoned trader, right? You guys are here because you want to at least advance, enhance your trading, enhance your learning, all that kind of stuff. So as we talked about a few minutes ago, options offers a lot of opportunities in the market, right? Flipping that cash and then getting 500, 600, 700, 800% is great. But, you know, you're not going to get that from regular stocks in the same period of time. But you've got to also invest long term, like we said, okay? Be disciplined. How many people here have been in a trade and ended up, you know, doing something wrong or going against their rules or, you know, done something differently than they normally would, right? Yeah?
I reverse trade too much.
That's it, discipline, right? A lot of different things. If it's jumping in, it's chasing. If it's jumping back in something you already won, it's discipline, right? It happens to all of us, okay? How do you solve revenge trading?
That's into your strategy. If it goes against it, just leave it alone.
That's it.
Trade
Right.
I had to tell myself, like, if I lost money one day, the next day, I tell myself, don't trade. I don't take no trade.
That's it.
And revenge trade, within you, everybody got that competitive nature within them. You just lost some money trying to get your bread back.
Yeah.
I had to tell myself at first, it was tough. I told myself, don't take a trade today, right?
Yeah.
When I finally got to that point where I was able to be disciplined enough to not take a trade, after I lost the bread, that's when I was going as a trader.
Yeah.
And it's funny too to bring that up. Like, it never goes away. It will always be around the revenge trading specifically, like, because that's just human nature, like you said. It's like you want to like fix what
happened, what happened to you. Like, I know, for instance, like J Money, that's in there. Like, I've seen him, it's happened to him a handful of times, but like, he's gotten way better since then. But every so often, you'll see it might happen, but it's like, it's diminishing the amount of times that you allow it to happen. Like, so if it does happen to you, don't be discouraged. It happens to everyone, even when you're like a seasoned trader. Just, it's the ability to make it happen less.
Yeah, exactly. And I'd say most people that revenge trade, it's natural. You're trying to get the money back that you lost. That's all it is. You're trying to get the money back you lost. It's not like you're angry or nothing, or you're crazy. No, you're just trying to get the money back that you lost, yesterday or today or whatever. It's normal. But like RT said, don't trade. Like the next day, don't trade. Look, the hardest thing to do in this market is not trade every day. That's the hardest thing. When you have the time, you have the phone in your hand, or you have the ability, you want to take a trade every day. You want to get active. You're like, okay, there's money to be made here. I'm trying to get active. You don't need to trade every day. One trade I took one of the trades I took, so we traded Palantir and AMD in the Discord 3 weeks ago. And then we made great gains off both of them. The next week, this wasn't even a revenge trade, right? The next week we traded them again and they went the wrong way. Now the reason they went the wrong way was because I was forcing a trade because, people wanted to trade, people had missed the Google or whatever I'd done last week. I think the AMD, they had missed the AMD. We forced a trade. Now that wasn't revenge trading, that was just discipline. Knowing, all right, I'd done what I need to do. I didn't need to trade that day. I did a Palantir call out, I jumped in the Palantir trade, we were all trading Palantir, and it went the wrong way. And that's just like, that was no need. That's discipline. There's no need sometimes.
I remember you did, you normally don't do ETFs.
The IWM.
Yeah, the IWM, we hit.
Yeah.
And then we got greedy and we went back in and it went the other way.
So that actually kind of ties into this. This was the IWM Green Day. That was June the 3rd. That was a Tuesday. We hit IWM, 0 DTE. We smacked it. We killed it. Now the next day, so I should have been done for the week. This is done for the week. Should have been done for the week. The next day, and I was on live stream. I said I'm done for the day or whatever the week. Anyway, the next day, they were talking about IWM in the chat again. I was like, all right, cool. Let's go and run it again.
That's a distraction with the chat. It can be too much going on. You got to noise.
The chat can kill you. So I was back in England anyway. That's why it says 6:49. That's why the time is like that. But so, short story. Monday we did good. Tuesday we did great, and I hit my goal for the week. Right? Hit my goal for the week. We're done.
How many contracts did you have after that?
I have the screenshot on my phone. I think quick look.
Wait, that was on a Tuesday, you said?
Yeah. I remember this exact day. It was the 3rd of June. If someone get your calendar up on your phone. Let me see that the 3rd of June was a Tuesday. Let me make sure. Get your calendar up on your phone. Was it Tuesday? Yeah.
So you was done for the
I was
week.
done for the week. I was in the live stream, in the chat. I was done for the week. I had made my goal. I was in England. I was on a Tuesday. I was chilling. I was done. And now, of course, but I'll look how many contracts I had. So I was done. Either way, I was done, right? Now the next day, you know how the chat be, right? You guys in the chat, you know how the chat be. Oh, IWM loading up again. I said, yeah. I said,
Everything go out the window.
I said, okay, yeah. I said, IWM. I said, we can go back for more. I said, okay, I had 25. 25. So I said, IWM's loading back for more.
It was cheap contract. The premium was cheap, like 50 cents.
Mm-hmm. And I'll tell you how many contracts I got this time. Hold up. I'll tell you how many contracts I got this time. Or if you go to losses tab, it's in the losses tab. We'll talk about it, but either way. I'll go to losses tab real quick in the Discord because I want you guys to understand the lesson. I put it in the losses tab, I remember, because I was like, yeah, I'm going back. I'm going to get some more of IWM. It made me my first 5-figure day of 2025. I'm going back for more, right? June. I'm pretty sure I posted it in there. But either way, I went back with 80 contracts, something like that. It's in the chat somewhere. I went back for more, and obviously, yeah, you know how it went, right? So I'll find the screenshot stuff for you afterwards. But so I went from the point is I went from 13 or 14K up on the week to going back more for Wednesday and losing like a 7 or 8, I think 7K right there. Boom. So what was the whole point of the great days, the Monday, the Tuesday, the good day? What was the point of that, right? If I just got distracted by the chat, I got excited, somebody said a few words and I'm like, okay, let's go back for more. Boom. My 14K week went cut in half pretty much for no reason, right? And I didn't even sell, like I lost, I think 40 or 50%. It could have got worse. It could have got 80, 90, but once that happened, I was like, yeah, I'm done here, right? But
it went reverse. I was like 50%.
yeah. So the point I want to make is, again, discipline, right? If you have a goal for the day, for the week, for the month, you hit it, be done, right? Be done. Honestly, be done. It's fine. The month is always going to be there. You don't have to come back for more. Like I said, great day, Tuesday, great day, June 3rd, amazing. June 4th, bam. You lose 6 or 7, 8K, whatever. What's the point in, what was the whole point in the great trade? You lose it.
Give it back.
Give it back for no reason. Again, that's disciplined approach, right? That's discipline. That's pure discipline. Right?
How many different positions you have open at one time, like for different tickets?
So I had like 2 more. So probably 6 or 7 max.
I only had it the same, but like 3 of them, 4 of them go sideways.
If 3 or 4 go sideways, then I'm not even going to be in 6 or 7. The only reason I was in 6 or 7 here is because they was going good and the flow was there. If I'm in 2 that are bad, and then I'm just in a couple, like 3 or 4. If it's going good, it's fine. But if I see a couple red spots, I'm like, no. Start cutting, take profit, take loss in here, like manage the trades. Here I was letting them have fun. This was last week. I was letting them have fun.
You trail on their up.
Yeah, exactly. Right. We're gonna have a break in 6 minutes. We'll have a break. Yeah.
I have a question. When we talk about managing the trade, is very important. But I think something I learned from myself, which is like managing yourself too, right? Those emotions and trading. What it did for me was it exposed a lot of flaws I had within my own character, right? And it forced me to level up myself as a person, right? In order to become a better trader, right? Whether I'm impatient, whether I get angry, whether I got fear, FOMO, whatever it is that you got within you. Once you start trading, I feel like that stuff enhances a lot, like way more, and then it forces you to I got to do something to make myself, a better person. You feel what I'm saying? Like, talk about that a little bit. Like, how was that journey for you?
Yeah. So I would say, from all what you said, what do you think is the most important part?
Like managing yourself.
Yeah. What do you think is the most important part of managing? As in, I'm asking for you.
Oh, for me?
For yourself, yeah.
Just like, for one, like journaling helped me, right?
Okay.
Looking in the mirror, being disciplined in other areas of my life. If I'm being disciplined, getting up early at the same time, going to the gym, doing that, eating the same thing, right? Whatever it is, that helped me, that discipline turn to the stock market. Like I come from professional football, like 1% of the world was able to do what I was able to do. You play other sports as well. But I know I already had the discipline, but I had to find a way to bring that discipline into the stock market. You know what I'm saying?
That's it. So for me, I'd say the real world perspective is important too, right? How long does it take? We talked about this yesterday. How long does it take for you to make this at, a 9 to 5? Realistically, and it could be any 9 to 5 in the world. Let's say the best 9 to 5s. How long does it make you make that in a day? So not how long. How many places can you make that in a day? Not too many. So realistically, like I did good on this day. I took my profits. Cool. There are other people in the world who will be in the trade and they'll be up this and they'll end up the day at 4K, 5K. Why? How much? So I put the real world perspective into it. How many places? Okay, I don't have the percentages up, unfortunately, but you guys know the kind of percentages that I'll be hitting. So whatever the percents were, how many banks are giving you? Let's say this is 200%. How many banks are giving you 20% in 4 or 5 days? How many banks are giving you 50%? How many banks are giving 20%? How many banks are giving you 100%? Whatever. How many of them are doing it? Not many. So there is a reason why I would take, I'll sell 2 contracts. I'll sell 3 contracts. I'll sell a couple contracts. There's a reason I'll do that, right? There's a reason I'll do that because real world perspective, right? I think we kind of get lost in the trading vortex, right? This is not real. This is real, but in the real world perspective, put this in real world perspective. Losing 11K, you go insane. Because it's trading, it's not like it's okay, but I'm back trading the next week. I'm ready again. Realistically, if I lose 11K on anything, right? If we go down outside now and we lose 11K each individually, we're never coming here again. We're going home. We're staying we're not doing nothing. Trading, we can lose this and be back the next day, right? Realistically, so I put the real world perspective into it, right? I think some people think this is trading money. It's not physical. It's not in my bank. It's not got my name on it. I can, So obviously, I took those losses and I took it well and I learned from it. But people will do this and they'll repeat it next week and the week after and then you know what the worst thing is? They're like, oh, okay, let me put more money in and let me get it back. You're like, whoa, I've seen some crazy stuff and I'm like, what? Don't put any more money. Don't put no more money in. Oh yeah, but I've got a good job. Don't put money in because you're just going down deeper and deeper and deeper. Real world perspective. If you had a job and they slashed your salary by 30K, you'd be upset. But in trading, you lose 30K in a year. You're like, I lost 30K in a year. I'll make it back. Nah, if they slash your salary by 30K in the real world, you'll be so upset, right? No matter what you do, I don't care what you do, right? I don't care if you earn 2 million a year, you earn 50K a year. You lose 30K, you'll be like, what's going on? Trading is okay. You say, I lost, my portfolio is down 40K all the time. Well, I'm going to put more in, I'm going to get it back. No, that don't make any sense. Real world, put real world perspective into it, So yeah, we'll take a break right now. Just kind of, if you want to get some food, if you want to get some drink, we'll be back at it at like 1:30, so 21 minutes. If you want to get food, drink, if you're cool, whatever. But we will get back to it. From the style out.
All right, so I was able to get this back. So after the bad RTA and all that, so I got this back positive, right? So this is my dilemma. I got two.
Oh, okay.
I got just two. The options ones.
Yeah.
So here, I got in DocuSign.
Yeah.
I didn't set my stop loss because I just got in, right? I got a Visa. I sold one contract with Visa for profit. It was the 18th, and it just started reversing.
Yeah.
I'm like, God damn. So you see what I'm saying?
Yeah.
Paychecks, fuck.
What was up, man?
And it's to the 15th. And I was like,
August 15th.
yeah, it's 15th. So I'm like, I got time.
Good time.
I'm not gonna stop loss it,
No.
even though it's down 39%.
Yeah.
And then so far I locked in. But yeah, so far
Yeah.
I'm down $1,000.
It's okay. It's not bad.
So this is what I
you're
I'm
doing
right there.
That's
So
okay though. You're not doing bad though. You're not doing bad.
So I'm not trying to put more money in this one.
No,
I'm just trying to leave
manage
it.
what you've got right now.
And then I got see, that's the thing, it's just bad habits. Like I got into SPY. I don't do SPY. I just got into SPY. Jay Money called it. He called it. I was like, oh, let me get a SPY real quick. But I was in the day.
Yeah.
And then like SPY started to, but I don't know, SPY moving is kind of crazy. I don't know how it's gonna look Monday, but I see tariffs and shit. I'm like, oh, great.
Yeah.
So
It's right there.
so I'm trying to see what's up.
People in the Discord was.
See, I just do that. I just do over leverage.
Yeah.
I just get too much.
It's tough though. It's tough.
So I got freaking 5 contracts in there.
5.
Because look, so what I did, you see what I'm saying?
Oh.
I try to average down. I try to get my dollars off average. Yep. I'm focused on one.
But if it's down, it's down like a number. But for me, the reason why I'm always like crazy down is because they're like slightly down, and then for inside that day, I don't wake up for a couple. So if I don't wake up early and it gets fucked in the morning, I don't see it. So I don't cut it until I wake up, and then it's like way farther down. And I'm like, well, it's so down, I might as well just hold it till it's dead. But that's what happened to me for my situation. I don't know what your situation.
And like I've had somewhere I was down and I
cut it, come in the next day, and it's up. And I'm just like, man. Honestly, I think we've discussed it before. We are in the past where it's like, once you cut it, pretend.
All right, live stream folks. We're gonna get some food. We're gonna get some food. We're gonna be back.
Don't worry about it. You lost that fish. We're on to the next fish. We're trying to catch it. That's good. That's good.
Yeah, we're gonna be back. We're gonna go get some food.
Go back to business. That's good. Honestly, if you're down, like if you see minus 35%, so like if you're a math guy, I'm a math guy. If I see minus 5%, a few years ago I was working with someone and we did the math on the fact that if you're down 35% with however much time left in your contract, the move that is required for the stock to make to get you back to zero and then positive again is so much harder to accomplish than you starting from zero and getting in green. So once you hit like minus 35, you might as well just see it as minus 25 because that's where it's going. It's going to look more likely than that. Now if it's down like minus 20 and your expiry is at the end of the week or something, there's a possibility that it can catch up. But like for me, that's what I would say. It's like if I'm waking up in the morning and I see like 35, I would. That's good. Now the only time that I would, if it's like down like 30%, and if let's say I'm waking up early and everything, the only time I would not get out of like minus 30% play is if he's because this motherfucker, he will. There's something I don't know what happens in his brain, but he will be able to like get stocks that he just got in too early or something. So it's like it'll go down to minus 30, but overall that play is going to play out. You just gotta be patient. But for other people that are let's say you're trading your own stuff,
If you're trading J Money stuff.
I didn't say that. But no, yeah. If you're trading your own stuff, that's what I would say discipline wise is. If you hit minus 30, just look at it at minus 100. Just get out.
I mean, you said something the other day about swing trading, like the first day when you're down.
First day is nothing.
Yeah.
We got a second day, third day, not to worry. First day, it doesn't mean anything. This is swing trade.
Sure.
Yeah. The only problem is sometimes swing trades, the first day, it goes like 40% down, and then it's like, oh, damn.
Yeah, after the recovery, going like down to like 3 cents.
It's a problem. It's a problem, right? Some, like Google yesterday, right? You see Google on Thursday. It was, no wait, we got it Thursday, we got it like 12:50 Thursday, right? Yeah. But then yesterday it went down like 40% market open. I was like, hey, we're holding, it's still go. And then it grew. Yeah. But sometimes it goes the other way around. For example, if Thursday would have gone down 40%, I might be like, oh, it expires tomorrow, I'm out. I would have gone on yesterday. So it kind of depends. Usually I wait, I usually wait.
In those swing trades, that's when you really need to lean into like the candlesticks and stuff that teach and show and that they all teach. That's when you really have to lean into those because that's when you are practicing your.
Yeah, those you practicing. Sure. He likes this one.
It's when you're practicing your confidence. So it's like if you're doing a swing play and you have to look at the charts, like I know I got like 80% competition.
So what is this? It's a clothing brand, but he's had to put pause on so like we got really sweatpants, t-shirts. We're in the process of really trying to find really good. Um, not like a retailer that can, not a retailer, someone that can take design and actually execute. Right now we're doing everything with these keys and the language barrier, and it's like, we spent so much money on samples that we gave them right next door, mock-ups, everything, we just didn't understand. We don't execute, so we're trying to find someone who was probably, we're going to actually execute. So, he also owns a, Sweden agility like training company, we train young athletes, and it's like college athletes and stuff like that, and then I own like NCSB, where I kind of do like staffing, about like games and stuff like that, so we're kind of all. Yeah, so, the job we got right now is not getting as much love as it probably should, yeah, but eventually we'll get there.
I'll say it's a hard, like, I feel like clothing in general is a hard business to get into just because, like, we have so many different programs that, you know, build everything for you, right? So that's not like creative design. Okay, good point. Everyone's just on that little one.
Yeah,
Okay. How do you? Yeah, it's difficult. We've been doing it very since.
So are you 22?
Yeah. Well, I imagine there's like really figure out style, the years. Yeah, for so we have little shirts for like we were never wanting it to be like clothing, right? But like that's just makes something so different. Yeah. And first, when you open it up, first comments, you know, some people are like, man, it's not stylish. And it's like, it's not the point, right? That's right. Yeah, like that's not a favorite. You pay for it, and then you know, and like profit is minimal in that. Like that's not the point. It's just to spread it. But yeah, but you get criticism about how you do it. Everyone has their own style. Exactly. So it's definitely hard. It's not where everyone finds it. You know, and I really respect people that really build brands. I mean, any brand, but specifically building yours. It's yeah. Being an entrepreneur in general, but being an entrepreneur is like your creativity is not such a big critique, but there's a side to this. You know what I mean? Like somebody can look at you like they can tell by your like how profitable you are, like okay, you're a good trader or you're a bad trader. Like there's it's not really subjective. Yeah. But when you're putting your creativity out there, or out there, and I'm not a creative person at all. But that's we got hamburger shoots, and we were like, all right. And then he's like, these don't get it. He's like, that's why it's not for everybody. Yeah, the ones that get it. Yeah. Because like even with him, like with fashion and stuff like that, like I'm opposite. He's very eccentric and like out there, and will try like he's very realistic. Even with trading, like, he's trying to get me to get the trading with him. I don't have the I always go back to people always ask me if I'm good with like, I mean, I should. Like, don't get me wrong. Like, when I feel like in our church those things too. When you observe, you realize the value of it. But I also realize it's a lot of work. And I personally am like, I don't have much time to. And I'm trying to do, but I don't feel ready right now. So I'm going to get that. Yeah. Like, do I want to commit to this? Exactly. He's in our office, like 3-4 hours a day. We have 2 kids. Where am I supposed to put that? Yes. Yeah, they were told me to be distracted and losing money. Yeah. It's rough, but I'm trying. Yeah. I'll put some liquor on it. Yeah. Try around with it, see where that takes me. Yeah, that's my like process. Okay. It should be right next door. Oh. I don't know. For people. Yeah.
Excuse me. You know where Shiso is? Shiso? Shiso? Oh,
They might have fire.
at the front?
Yeah.
Okay, thank you.
NFTs,
Devin was good.
Yeah, well, that.
Oh, Devin not gonna leave his house for nothing.
Unless it makes him money, he don't.
Not even that. Even if you paid him $500 a year, he wouldn't be back.
Yeah.
Is that Joe's? Yeah, Joe's used to that.
Yeah. Where did you go?
I don't know.
Oh.
It slides more. Joe's slide.
Oh, what else in the RTA?
Yeah.
RTA group. What day you guys stay until? It's like 4 p.m.
I'm not sure what's happening.
I'm gonna say with the brunch. Brunch at 12.
Where?
About that 5 minutes. Cool. Here you go. I think so. Yeah, well, good. So what it was last night. Okay, okay. So 12 p.m. there.
Who will be down to come to brunch tomorrow at 12 p.m.? Very cool. You down? You down?
We still here with that.
We cool. You down? 5. Submit 5. And who's staying till Monday? No, who is staying till Monday? No. Oh, yeah. Well, Miyagi is staying till Monday. All right. What's up, man?
Oh, that's that.
Really good. It was fun.
We have time. We have time. You can put my, I lived there 2023. So you know there. Yeah. So when you spend something out there, yeah, maybe. There's other places out there, on
So I'll sell it. Las Olas, you know.
There's a little more with right. You might hate that tonight, but it's
Yeah, but it's something.
not from here.
Yep.
Yeah, I went out a few times.
If you want to be, so I'll walk on Saturday, you know what I mean?
Not to have you here, hopefully you guys enjoying it.
We missed yesterday, so I should catch up.
How long stay?
Monday or Tuesday? Tuesday.
You already have accommodation booked on Sunday night, Monday night? So, okay, that's 4. Where y'all coming from? Is that it?
We love my grandson. Like, I feel like I've been like in the middle of like long-term portfolio. I just got into options.
You need a drink?
So I got into like.
Oh, there's water right there, man. That's all.
You want alcohol?
Yeah, I'm good right there, man. I'm chilling, man. Let's see if I name turkeys on the alcohol. You're always going to equities like this, or more easy.
And we would like have low level drinks. And then they don't have like overspend.
A lot. A lot size.
Yeah.
Meaning, overspending probably like a position, you're probably.
Oh, no, I mean, it's everything. I was drinking, I don't get my folder, but all right, cash.
Oh, okay.
So.
Yeah. Yeah. I was in the. Yeah.
Now I'm not gonna get our accounts. So, yeah. But the problem is, you pick everything. It's council.
All right, right.
Yeah.
All right, folks. Hopefully everything's making sense and connected for you guys. You know, I know this stock stuff can get a little bit confusing, but the reason I'm saying that is, hold on, let me get the live stream kicking again. All right, everybody can pass this round. You can have a look at it, and then you tell me what it is. We're gonna work this out together.
What it is?
Yeah, what is it?
95.
Okay.
Target.
You said target?
Yeah,
All right, let it go around. Yes. The job?
Or stop.
Stop. Okay. What else are you going with? Diverse? job and a dream killer, what does it represent? What does it look like?
Shirt of the company.
Okay.
I'm asking the shirt of the company.
Oh, like both. He said a 9 to 5. He said a relic from your past life. A relic from my past life. She said a stock.
Opportunity.
Okay. That's interesting. All right, cool. So, you guys, most of you, actually, everybody apart from you, because you said stock, got it right. No, you said stock. All right, both of you said stock. Don't worry, it's nothing wrong with being wrong. But, so everyone who said stock, nah, it's not that. But it is a 9 to 5. It is a relic from my past life. It is a dream killer and a job. But the reason I got it is because this was my shirt from 2018. So I was working here. It was door-to-door sales, nothing, too difficult, nothing crazy. But obviously, it was a grind. So the reason I'm putting that out there is because I know a lot of you have worked, a lot of you work, nothing wrong with that. Obviously, I worked. But the reason I have this is because at the time when I was working, I was doing my grind for them 8 a.m. or 8:30 to 6:30. Depending on when they would let us leave. Anyway, and it was Monday through Saturday. That was the kind of problem, right? So the reason I'm saying that is because during that time, while I was working here, it was a very short period, but while I was working here, I was still working on myself, on what I wanted to eventually become, where I wanted to get. So, like I said, 8 to 6, we're here, we're working. I can check something on my phone here and there, but it's nothing like what I'm doing now, right? But the reason I'm putting that out there is because what would I do in the evenings when I'm home, when the markets are closed? And I was in Maryland, by the way, so the markets close at 4 p.m. But what would I do in those times? That's when I start working on myself. That's when I start studying, learning, focusing on what I want to do and where I want to get to and how I want to become. So yeah, you mentioned dream killer. I knew at the time when I was working there, this is not long term. This is not forever. This is not even going to be. If I was less than a month, but this was not even going to be a yearly thing. Like I knew for sure because you guys have worked jobs where you're in it, you're like, this is not for me, right? And there are great jobs out there. There are some sick jobs, right? Some that I look at, I'm like, yeah, that would be a nice job. This one, when I was in it, I was like, that is not it. This is not it for me. This can't be it for me, right? That, 1,400 bi-weekly? No, not even. That's exaggerating. That 1,100, 1,200 bi-weekly is not really, it's not going to get me where I want to get to, where I want to go, none of that kind of stuff. So the reason I keep this with me, right? Most people, they throw away the trash, whatever, cool. I always kept this because I knew eventually it's going to symbolize something for me, right? And when you mentioned stock, I actually didn't even think about that. They've got stock, right? But at the time, I was just like, don't worry, I'm doing this now. This is the here and the now. It's not the be all or end all. It's not the long term. It's not where I want to be in 5 years, 10 years, none of that, right? So that's 2018, right? So again, to go all the way back to the start, the reason I've got that up is because, yeah, you might be in something right now. You might be in a position, a place, a location, a city, a frame of mind. Like you might be somewhere right now, whether it's mentally, physically, whatever, where you're like, cool, I'm here right now, but this is not where I want to be in 2 years, 5 years, 10 years. And this is not where I'm going to be in those times, right? So again, this shirt is really important to me, not because of what I did there, but more because of how I felt and how I thought and what I knew it wasn't going to be long term, right? So I keep this. It's going to be with me forever, Obviously, if someone took it from me or I lost it, it's not the end of the world, but I keep it because I know where I've been, and I know where a lot of people are. I know where a lot of people have been. And it's a reminder again, fast forward 5 years, fast forward 7 years, 3 years from now, so 10 years, this is not going to be nothing but, again, what it was in the past, right? When I wore it, it was something which was like, yeah, this is where I'm at now. But again, I knew when I was wearing it, when I was doing my job, when I was doing those kind of things, this is short term. This is that, and that's what I'm grinding to get away from, right? Dream killer was a really important word because for some people, I know there's people who were there 7 years ago they're probably still there today, maybe, and they don't want to be there, right? Nobody wants to be working from 8 to 6, Monday through Saturday, realistically, right? Unless you're doing something you really, really, really love. But in that role, I doubt people are trying to, really stay and do that kind of stuff. So I got my RTA t-shirts here, you know. Anyone want to read it out?
Place where your money works for you. Home ballers, freedom, home ballers.
That's it. So back then, I was working for the money. How was I working for it? Walking around, talking about, we were doing like the TV package thingies, and the phone plan, of course. Sorry, not TV package, internet package and phone plans, of course. And with that, there's no freedom. You're working for the money. You know, you're walking around, you're trying to talk and you're trying to pitch, you're working for the money. We all know when it comes to trading, investing, crypto, options, stocks, that money is working for you. And we want to get to the point where we want, like, right now, we're still all kind of actively, you know, using that money to make money actively, right? Putting in trades and stuff. We really want to get to the point 20 years from now, 30 years from now, where we are all sitting here talking about sports, drinks, history, politics, and the money is working for itself. We're still, right, what we will do now, we're still actively trading and all that kind of stuff. That's fine, that's cool. But 20, 30, 40, 50 years from now, we don't want to still be actively putting in trades on Robinhood or Webull, right? We want to be literally maybe on a beach somewhere, and the money is literally working for itself. The money is making itself. We haven't even looked at the portfolio in 3 days, 4 days, right? That kind of thing. And the money has gone up, right? So right now what we're doing is good. Right now what we're doing is building. But again, eventually we want to get to the point where we're really free, freedom, real freedom, and we're really letting the money work for itself and make itself, right? Now to get there, you gotta hustle, right? You gotta work. You gotta do the stuff we're gonna talk about. Got one more, right? You want to read it out? You can read it out. You got it.
Take control of your money, take control of your future.
Right. So this is the foundation now where we're at. We're taking control of the money so we can take control of our future, right? I've given you a look from my past. Now we're standing in the future from that past, and now we're kind of trying to discuss how we can all advance going forward. We can all start to level up, make some money, you know, and, you know, live the life that we deserve, life that we dream, all that kind of stuff. So, oh, hold on. There we go. Anyone give me a stock, any kind of stock? Any stock?
XYZ.
All right, XYZ is a good one. Let's take it back to, we're going to go back. Let's see how far we can go back. I'm looking at candles. I'm going to go back to, let's go back to, all right, cool. We'll go back to 2016, okay? How much was XYZ in 2016?
Like $7.
$8, right? 2016. None of us was investing or trading, right? I wasn't. All right, cool. So whoever was investing trading back then, XYZ, Square, at the time it was called Block. Sorry, at the time it was called Square, now it's called Block. At that time, nobody knew that fast forward 6, 7, 8 years, it would go up to 260, right? 280. No one knew that, right? And that's 2022, 2021. So 5 years, $8 to $280. I wish I got a piece of this. Anyone else? None of us did. It's okay. There are other stocks, there are other opportunities right now going to be like that. But again, we're talking about taking control of your money so you can take control of your future. Whoever bought these shares, you don't have to be right here, but you could be here, 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 here. Whoever bought these shares was eating good end of 2021, right? So how do we get those opportunities? How do we find those opportunities? That's what I kind of want to talk about, right? One more stock. Anybody? Uber? So, $2022, right? Near the lows, we're at $22. Maybe even less. Right, we were at $20, 2022. Actually, I think this one was in the Discord in 2022. So, we'll see. Either way, so 2022, June 2022, it it was at $20. Now we're in July 2025. Just 3 years later, Uber has 5x since, pretty much 5x, right? $20 to almost $100. It's 5x, just 3 years. Again, take control of your money so you can take control of your future, right? This is an opportunity, and I don't know who saw it as an opportunity back then. I don't know who did, who didn't, whatever. But for those who took advantage of this down here at $20, right? Right now, shares, we're talking about shares. They're eating good, right? 5x. And again, it comes back to the long-term perspective, long-term thinking. I'm sure many people traded calls and puts here or calls here, whatever, right? But they don't have any stock. They don't have anything to show for it. No stock, no shares, no nothing. Again, if you put a few thousand in here, right now, you're eating good, right? Your 3,000 is now 15,000. Your 2,000 is 10,000, whatever it is. And that's how those, the rich get richer thing happens. Because those are the guys who load up near the bottom, right? Not the exact bottom every time, but near enough near the bottom, anywhere around here. They're loading up, and yeah, when they're 5x over a few years, they're eating good. So I want to get into some financials and stuff like that, and some charts and stuff like that. And I want to kind of just show you guys some good opportunities for the long run, and why I say they're good opportunities for the long run. And you probably want to note these down, right? Long-term stocks, obviously not financial advice, but just what I'm looking at. So, what stock is this? Yep. SoFi. Yeah, SoFi. So it's $21 right now. Let's go to the weekly chart. SoFi. February 2021, it was $27. Okay, that's pretty good. It had just recently IPO'd. It's a fintech company. Now, fast forward to all the way to November 2022. It was $4. Okay, a stock drops from $27 to $4. Most people are along the way thinking calls, puts, all that kind of stuff. I'd say 2-minute research on Yahoo Finance, CNBC, Bloomberg, Market Watch, any of those websites, and this stock, you'll see it's an opportunity. Now, I was late, kind of late, buying in here last year. When I was banging on about it last year around here. I was kind of late. Compared to where it's at now, was I really late? But this is what people think. Damn, it ran from $4 to 8 or 10. I've missed it. Oh, it's back at 6. It's going to go to 4. I'll wait. Oh, it's going up again. I'll leave it. Before you know it, right? It's up at $21. And before we know it, where will it be again? Yep, $27. We're going to go back up to $27. And before you know it, it's going to do what Palantir did and be gone, right? So, again, when it comes to investing long-term, when it comes to how you find opportunities, how you trade, all that kind of stuff, I want you to always keep a perspective of scroll left on the chart, go to the weekly chart, the monthly chart, the 3-month chart if you can, because some stocks have like 10, 15 years of financial data. This only has 5 years, 4 years. Go slide left, scroll left, and check it out, right? Check out what is a good opportunity for you. I'm going to pull up, I'll say it now already. So it's also good to know about the CEO. It's good to know about the company, what they do, this and that. SoFi is a fintech company. Anybody use SoFi? No. Anybody heard of SoFi? Like what they do? Right, cool. And there's obviously SoFi Stadium out in LA. So SoFi is a fintech company, right? It's ran by a guy called Anthony Novo. So I want to just show you. I'm saying it takes, 5 year time, right? Coming up. Does he not have a Wikipedia? Okay, well, he doesn't have Wikipedia. Either way. All right. So you're going to see where this guy works, and you're going to understand why it's important to know this kind of stuff, right? Boom. What do we see? What's the first one we see? All right, cool. He was a COO and a CFO, right? Wait, it's not done yet. Oh, wait, it's already there, yeah. If somebody works for, it's just not just works for, it's the COO of Twitter, worked for, co-head of investment banking for Goldman Sachs, was the CFO of the NFL. Who does not know what the NFL is? Okay, so everybody knows what the NFL is. Okay, somebody was a CFO of an NFL. Who does not know what Twitter is? Everyone knows what. Okay, so you're getting my point. He's not just a random guy. CEO of SoFi, cool. Maybe you haven't heard of SoFi, whatever, cool. But you've heard of Twitter, you've heard of NFL, you've heard of Goldman Sachs, right? Someone was a managing director of Goldman Sachs, a CFO of the NFL, a co-head of investment banking, and a COO and a CFO of Twitter. There's a reason this guy is a CEO of SoFi. When it comes to, this is where it gets funny, because if he was because these are all financial things, right? If he was all working this for a healthcare company, cool. He still knows what he's doing. He's a CFO. He's been a CFO, a COO, and he's working at a financial company. He's a CEO of a financial company. You see the correlation here, right? He knows what he's doing. He's not a random guy who's just, like for example, when Elon Musk was, Twitter, head. Like, not that Elon Musk doesn't, but Elon Musk knows what he's doing, of course. But the connection is different when you've got a CFO, a COO who's working now and the head of a financial company. So there's no guarantee SoFi goes to $50 or $100. There's no guarantee. But there's a guarantee that this guy knows what he's doing, and you can see that this is real leadership right here, right? So when this was $4, $5, I'm thinking, okay, that's okay, but this is a long-term opportunity. I didn't get in. But last year at $6, I'm like, okay, it's recovering again. Do some research. I found this guy. I said, oh, yeah, I want to be a part of this. SoFi, because I knew about what SoFi was, what it did. I didn't really know who the CEO was. I found that the CEO was working for Twitter, Goldman Sachs, and the NFL, and CFO at these places. And I realized, oh, wait, hold on. This guy's going to take this place far, right? You don't work for 2 decades, as heads, as the top of these companies, if you don't know what you're doing, right? You know what you're doing. It's like Mark Zuckerberg, right? Everyone was doubting him in the late, 2016, 17, 18, whatever. There's a reason he built Facebook from 2003, 4 to 2015, 16, 17. There's a reason Facebook was where it was. It was the most, it was one of the biggest companies on the stock market. And now Facebook, or Meta, is up there, with Apple, Nvidia, all that kind of stuff. Or I should say, Apple, Nvidia are up there with Meta. And again, Meta, right? This is why you need to know a bit about companies. This is the long-term game right now. So long-term, right? If I say Meta to you guys, or Facebook, what comes to mind?
Facebook was social media.
Social media, okay.
Now it's an advertising agency.
Okay.
Sorry, it's a marketplace.
Okay. Yeah. Okay.
I think also the fact that the founder, Mark Zuckerberg, is like really into AI in the future, but like also like the next big thing might be handled by them.
All right. So you talk about marketplace. You talk about AI. We talked about social media. How do all of you guys know me? Social media, right? You just mentioned AI. What was one of them, not the main, but one of the reasons that Nvidia boomed last year? AI. Palantir boomed. AI. What did he say? The future, right? People always trying to get the next thing, right? So, if a company like Meta owns WhatsApp, you guys know what WhatsApp is, right? Owns Instagram, you guys know Instagram. Runs Facebook ads, people all using their ads platforms. They also collect, data, whether that's legal or illegal, whatever, that's a debate for them. But either way, they do all that kind of stuff. So that's like a juggernaut, right? They're doing all these kind of things. They're always innovating. You got Facebook stories, that kind of stuff, Facebook marketplace, all that kind of stuff. The reason I'm saying all that is because you need to know what it does, how it operates, and then you can really decide, do I want to invest in this long term? If Meta didn't own Instagram, didn't own WhatsApp, we had no idea who Mark Zuckerberg was, we had no idea if they use AI, if they didn't have ads on their platform, it wouldn't be an $800 stock today. But because it has all of that, we know this is something that is reliable, has a strong history, a strong past, and is come from being just a pure network with people, chat with friends, platforms, come from that to being a real powerhouse in so many different industries. So the reason I'm saying this is because I want all of you guys to understand that SoFi, XYZ, Nvidia, Meta, all of these are much more than just ticker symbol in a stock chart, right? They're real companies, they're real industry institutions with an actual plan for the future. So again, going back to this, right? It takes it took us 2-3 minutes to go onto Google and Google the CEO and figure out what he's done, what he's about, this and that. And I'm sure he's going to take this company far. There's a reason I'm investing in this in this company. There's a reason I've been banging on about it since 2022, right? This is a company that's going to go far. And what I just talked to you guys about, you can do in 5-10 minutes. You can literally Google CEO of Palantir. You can Google CEO of AMD. You can do your research on Lisa Su. Lisa Su is the CEO of AMD. There are these people who run these companies, and their vision, obviously, for the company is to take it far, right? They're not leading this company just to do nonsense and mess up and waste time. They're doing it so they can lead the company far. So the guy who's leading this company, he's trying to take it far. He has worked he's worked with financials in some of the biggest institutions in the world, NFL, Twitter, what we talked about, Goldman Sachs, and he's trying to take his own company now. He wants this company to go and be a $100 stock one day. He wants it to be a $1 trillion market cap one day, right? So again, understanding that when a stock drops from $20 or $28, wherever it was, to $4, $5, it might not always be a great buying opportunity, but there's a potential that it could be a great buying opportunity, right? And you have to figure out if it is, if it isn't, right? Sometimes you'll see a stock, I think Lucid is suffering right now. Yeah, right? So sometimes you'll see a stock suffering. And I haven't done enough research on Lucid, the company. Obviously, I know what Lucid is, right? I know its competitors, I know what it does. I haven't done enough research on the company to know if this is a good opportunity or not. Is there anyone here who could tell me if this is a good opportunity or not right now?
When you do the research on like the revenues and stuff like
Yeah.
that, and you break down like the good revenues and look at Lucid, there's probably a bad revenue.
Okay, yeah, that's a good idea. I mean, that's kind of what we got into yesterday and what we're going to get into, but we can definitely do that right now. That might help, right?
But I would say the momentum is not good.
It isn't. But what did we see with SoFi? We saw something similar with SoFi.
Like it's trending downwards.
Yeah, until August, I think October 2022, straight down. Okay, so this is Yahoo Finance. It's free to use. All I did was type in Lucid in the ticker symbol, and I pulled up the financials. This is the income statement, right? Every company has an income statement, a balance sheet, right? Income statement is your revenue, your expenses, so you know how much you're bringing in, how much you're putting out, right? Balance sheet is your assets, your liabilities, your owner's equity, right? So just to go to account, not to dive too deep into accounting, if any of you taken accounting classes before, when you have a balance sheet, your assets, what you have as an asset, is the formula is owner's equity plus your liabilities. So pretty much what I want to focus on right now here is the revenue, the numbers.
Top line revenue.
Top line, right? We've got top line, we've got bottom line, okay? So 27 million 2021 went to 608 million 2022. These were the good times. If you could jump from 27 million to 608 million, that's a good jump, right? So we're going to go to the chart in a sec. 2021 to 2022, we saw a huge jump in revenue. Let's go back to the chart. 2021 to 2022. Right? So 2021, back here, to 2022. Where was the stock in 2021? $9. 2022, where was it? 55, right? Go back. Does it match what we had here? 27 million, right? There's a huge jump. Now, don't get me wrong, stock chart is not only about the revenue, no. But there's a reason the company goes from 27 million to 608 million, and there's a reason that the stock chart goes from $9 to $55. Okay. Again, you can just go onto Eurofinance, have a look at the numbers. Just go from 2020. It's got the dates there: 21, 22, 23, 24, and you can see the numbers, right? Now, 2022 to 2023, decrease, right? Which 608 to 595, decrease. You never want to see a decrease in revenue, but sometimes there's a reason for that. Okay. Now, the problem here is they had a decrease in revenue, and there we go. The cost of revenue also went up. So not only is your revenue going down, your cost of revenue is going up. So that doesn't make, that shouldn't make any sense, right? If your cost of revenue is going up, let's put it this way. Let's say I make 50K a year and I spend 10K on ads. Next year, I spend 40K on ads, but I make 30K. My cost of revenue has gone up, but my actual revenue has gone down. That's not a good thing, right?
Yeah.
I'm spending more and I'm getting less. Nah, you want to spend less and get more. So the cost of revenue, it increased from here to here, great, because the revenue increased substantially. The next year, the cost of revenue increased again, but the revenue went down, right? Horrible year for gross profit in a negative, right? And this will take you a few times to get used to. You also probably have to watch some YouTube videos. You can also ask me or do a one-on-one, whatever. It takes a lot of time, to really learn it. It isn't easy, unless you really do e-commerce or you've done accounting or studied maybe financial management, financial planning. It won't really come to you that quickly. Okay, so I used to do e-commerce, so a lot of this stuff I have to look into. That kind of stuff. But either way, so fast forward, revenue started to increase again. Cost of revenue, decreased a little bit. Either way, when you want to look at this kind of stuff, I'd say the numbers to focus on: total revenue, gross profit. That's a bit more advanced. So yeah, total revenue, gross profit, and then the earnings per share and the total expenses. Okay, if you can look at the total revenue and the total expenses, you get an idea of what's going on and what they're doing, right? So just looking at this, it might be tough for you. Is this a profitable company right now?
No.
Got it. It's not. Why is that?
You're in a deficit in a sense, right? So your earnings per share is negative. Your cost of goods are increasing throughout the whole thing, and it's just the normalized income is just in the negative, it's getting deeper in the hole. Now, is there a case where if it continues to downtrend, will be listed?
Yeah, that's a possibility.
That's a possibility too. I've seen that happen with companies.
There is possibility. So, to put it simply, everything he said was spot on. To put it simply, look at the revenue number, look at the expense number, right? The revenue is, let's call it 9 million. Look at the expenses, it's in the billions. By the way, this is all in thousands. So this is 870,140. This is actually 870 million. I know it's a bit confusing, but yeah. And then this is, expenses are going crazy, right? So you're operating at a negative. It's not a profitable company.
Is it the same way it's kind of look into what market share they have? Like if you're in the EV,
Yep.
I don't think they have a lot of market share.
Exactly. I want to look at, Workhorse. So some of Lucid's competitors are Workhorse, Neo, Xpeng, I guess Tesla technically. So yeah, look at this company. So 2021 was a disgrace. But 2022 and 2023, when they actually started to get high, they doubled income, right? They doubled their revenue. Now they cut it in half. So you went up 100% just to go down 50%. And you've gone down again a little less than 10%. So right now, I look at the EPS, the earnings per share, negative. Your earnings per share should not be a negative, right? It shouldn't be a negative. And let's see, let's go to the statistics or summary. Oh yeah, this is good. So, okay. So this is the quarterly revenue. This is the quarterly valuations. So quarterly market cap, right? It went down went down again, finally rose, went down again catastrophically, right? So current market cap is around 41 million. So two things you want to look at: forward PE, and trailing PE. This actually doesn't have a forward PE. That's how bad it is. I'll provide you a company with I think, a decent.
Is there a certain market cap you probably want to look for if you look for a long term?
Yeah, I'd say 500 million for me. Some opportunities will be a bit less, but let's say 300 to 500 million at least. If anything less than that, yes, if I find better opportunities.
How do you feel about Grab? Do you think that that's a good buy?
Grab?
Right now?
We can look at it. So we're going to go to the financials. So first thing that pops out to me, steady growth, steady revenue growth. That's good. So they're consistent, right? In the last 4 years, they've been consistent. That's a great sign. Second, cost of revenue is increasing, but that's okay because the revenue actually is increasing. So consistent, okay? Again, gross profit. First, they operated at a negative, and then they became profitable, and they're
scaling up.
They're scaling up. It's steady growth. This is what I like. I always like steady growth. And let's say for revenue, I like at least 10% revenue growth year on year. Okay, so you can calculate it. You can calculate. Okay, what's the growth year on year? If I see 10%, 12% every year, that's okay. If it's a little bit less, it's also okay. But there's so many companies. So some companies are going to give me 10%, 12% revenue growth every year. That's fine. I'm gonna find those companies. EPS is still negative right now, but it's not as bad as it was back then. So steadily growing again. EPS is steadily getting better, steadily improving. Okay, and the expenses are not crazy. They're not crazy, so that's okay as well. So what I'll next do is go and check out go to statistics. Okay, so this is where the problems begin. Forward PE of 86, way too high. I like a forward PE around, I'd say anywhere between 15 and 20, maybe 15, 25, maybe 30 max. If your forward PE is 86, wherever, then I need to see substantial growth every year. The growth we saw was consistent and it was smooth, but it wasn't like they were going from 2 million to 2.5 to 3.5 to 4. Nah, they were steadily growing, but the forward PE is at 86, which is very high, very high. I would expect to see 86 from a company which is probably $20 and probably been rising. Forward PE of 86 is very high, very high. So for me, what that means is from the actual financials and what we saw in the income statement, they're not, the numbers there are not matching with the forward PE that they've got here, right? So it could be a great long-term opportunity. It could be, it really could be. But I would say there's better opportunities elsewhere for myself. Now there's a reason that forward PE is so high. That part, I'm not really sure what they're doing. I'm not completely familiar with their operations, what they're doing. I can go and check the chart as well, get me an idea of where it's been, what it's done. Okay, so here we go. So maybe when the stock was down here, maybe the PE ratio was a bit more relevant. Maybe it was about 40, 50, maybe whatever. Right down here, anywhere down here, right? $3, $3.70, $2.80, around there. Maybe it was okay right there, right? There's a reason that up there at $5, the forward PE is quite high. That's probably telling you maybe a pullback is coming, or maybe it's going to consolidate here. Maybe it's not going to. Maybe the next move is not going to happen soon. That's what the forward PE of 86 is telling me. That's based on their financials. The forward PE is based on their financials. Now, if they produce a new product whatever it could be, flying cars, whatever it could be. This stock might jump up to what? Where was it? $9, $10. Sure, and I might have missed out. But again, it's risk to reward, right? Forward PE was at 86. When I look at the chart, I'm like, you're not. I mean, in the last couple of years, you're showing me a bit, but nothing crazy. I look at your income statement, again, decent, but nothing crazy to justify the growth, right? So I'll have a look at the balance sheet as well. We looked at the income statement. Let's look at the balance sheet. All right. So what I talked about, assets, liabilities, owner's equity. So the number of assets has gone down since 2021. See, this is where, so all of this ties into each other. The income statement, the balance sheet, the statistics, the cash flow, it all ties into each other, right? The income statement was looking pretty good. The balance sheet, not as much. You had 11 billion back in 2021, then 9 billion. Number of assets decreased again, finally going up again, right? Liabilities have gone down. So they went down, they rose again. You want to keep liabilities down, right? Think of it this way. Let's say you have 2 paid off and 1 paid off car, and the next year you add a car on a loan, and now you have to pay it off as a liability, right? You want to keep liabilities lower. And obviously, same as with humans, we have liabilities, that's natural. You want to get the assets going up and the liabilities going lower. Those are the main things I'd say you want to focus on here. I mean, debt is important as well. The debt has decreased, which is good. So yeah, I think it's probably got some good potential. I'll have to do more research on it. But right now, if I want to buy shares, I would just wait. I don't think it's going to do anything crazy, catastrophic in anytime soon. So I wanted to pull up AMD as an investment. Yeah.
Don't you have to review their earnings report or something? Because sometimes I see some stocks will take off as soon as they have an earnings report and start getting the profit or something like that.
So you're asking what I would do, or?
Yeah, you would wait to see. Look at an earnings report before you purchase shares of them or something like that, or you would just wait.
SoFi has earnings coming in 17 days.
Yeah.
So how do you position that?
Yeah. So how I position myself ahead of SoFi earnings? We can go to the chart. We can go. Everything is in here. Okay. And these are great questions. That's why I like that you guys are engaged. So the new one, 984 million, right? 22, 1.5, right? 2, 2.1, 2.6, 2.8, right? Pretty impressive, right? Steady growth. EPS, we have from negative 1, negative 0.4, negative 0.3, 0.46, 0.44. It's great. The diluted EPS as well is increasing. Okay. So you're seeing the growth, you're seeing the consistency. Okay. Now, if we go back to the statistics, right? So forward PE is high at 71. It's high at 70, 72. But you have to take into consideration that the stock has ran from $9 in April to $21 today. It's doubled in 2 months. The forward PE is going to be high. People have high expectations so far right now, right? It is very high.
For SoFi, a couple years ago, it was in the crypto business. They got out of the crypto business.
Yeah, they got
back in, right?
Yeah. Now, they have announced plans to be back in. So I don't know if the actual company is operating back in, but they have plans to be back in, and it's helped it run. It's helped the stock run again. Okay. So again, 71 PE is high, but compared to, and also you can do this, compared to the other stocks in the same sector. So UPST, Affirm are in the same sector. And we can actually, we can show you this, right? UPST and Affirm. And it's good to just have some idea on what the company is doing, have an idea of what the competitors are doing, right? So 46 forward PE for UPST. this right now looks like a better opportunity. But if you look at the stock chart from UPST and stock chart from SoFi, SoFi has ran a lot further than UPST has ran in recent times. So again, if SoFi has been the one running, UPST hasn't really been running like SoFi has, right? Affirm as well, right? And you guys know what Affirm and Upstart is, right? Like borrowing money, lending. Okay, cool. Here we go, 96. It's way up there. So from the 3 right now, some people would be like, all right, I might look at Upstart as a long-term investment. Some might say I want SoFi because it's cheaper and it's easier for it to double, which is also true. There's different reasons behind different people's decision making, right? I said I like SoFi because of the CEO, because of what the company is doing, the innovation. Some might say they like SoFi because it's just a cheaper stock and they can afford it. There's nothing wrong with that either. But you need to know why you're buying something instead of something else, right? I just picked out 3 stocks in the same sector, and different people would have different opinion on what they're buying and why, right? So back to what you were saying about earnings and stuff like that. So earnings is upcoming, and we should be able to see. Hold on a sec. So here it's saying the PE ratio is 49. Oh, sorry, we're looking at the forward PE, weren't we? Okay, let's hold on. Let's go back and do a comparison again. So SoFi PE ratio 49. Remember that, 49. You have forward PE and you have PE ratio. Forward PE is like a further outlook on the future, where the PE ratio will be. So that will be usually higher, right? Companies expect to go higher than where they are right now. UPST, let's look at PE ratio. No PE ratio. All right. AFRM. No PE ratio. Okay. So
What does that mean when they have a PE ratio?
So the price to earnings is not matching. So let me see why that might be. I'll actually try and Google why that Affirm PE ratio. There we go. So the price to earnings is not matching. So actually, they haven't. I didn't even realize that Affirm's. I didn't look at the income statement, but Affirm's EPS is actually negative right now.
This is the defaults.
Right.
We're getting all the defaults.
So, okay, that makes sense. So again, why would someone invest in SoFi, or why would I invest in SoFi instead of Affirm and UPST? Well, that right there. I didn't even realize that their EPS is negative, which is actually crazy because, all right, they have a forward P of 96. So within the next couple of years, you should expect to see Affirm doing a lot better than it is doing right now. Yeah.
Yeah, because they're getting all the partnerships.
Yeah.
So they're locking in with Amazon.
Yeah.
And other places like that.
You'll see Affirm in a lot of companies.
Yeah. So the more marketplaces they get locked in with, that's what's going to clean it up. Because you're relying on consumer purchasing.
Right.
Versus SoFi, they're in the business of student loan, refinancing,
banking,
personal loans, things like that. So,
which is funny. I didn't
you got
realize
diversity.
Yeah, I didn't realize that. And so with SoFi's customer base, it's still pretty small compared to where they want to be, where it will be in a few years. When they start bringing on more customers and bringing on probably wealthier customers and find ways to get into the big boys bank account and big boys banking, it's probably going to really take off. I didn't even realize Affirm had a negative EPS. So again,
Klarna and all those.
Yeah, Klarna, yeah. So obviously, this is a good point. PE ratio is just one valuation metric, right? Growth potential, that kind of stuff, revenue, market conditions, what we talk about, partnerships, news, that's important too. But yeah, I didn't even realize the PE ratio was negative. That's why the numbers are not matching up, because the PE ratio because the earnings per share is negative. So let's see what's going on with UPST. So the PE ratio is minus 106. I didn't even realize it was that bad. So again, why would I invest in a SoFi instead of a UPST or Affirm? Well, if you have a PE ratio of negative 106, yeah, that's crazy. That's very crazy, right? So their overall earnings is real negative. The overall earnings is real negative. Yeah. which is also strange because back in 18 or 16, Upstart made it a lot easier for people to start, taking like loans and
I mean,
payment
going
plans.
SoFi's cost of capital is a lot cheaper.
Just way less. They're probably doing a lot of in-house stuff.
Yeah.
So okay, but yeah, a couple of looks at these kind of things could tell you, and as I've said before, companies, like if we were to look at Oscar has a great revenue, balance sheet, all that kind of stuff, but the stock price is way down. Well, it's still up in comparison to where it could be. But yeah, Oscar is still pretty low from where it could be. So yeah, it all comes down to just doing a little bit of research, understanding, EPS, revenue, income, expenses, all that kind of stuff, and then using Google, right? I didn't even know UPS or firm was both operating at a negative. I didn't even know that. I trade the stocks. I don't have shares in either of them, obviously. And yeah, doing a little bit of research, you find out stuff which you didn't even know.
So you're using a combination of the technicals, which you're doing right here, and
yeah, both, yeah. So I know I keep going back. I did want to show AMD. So, all right, the market cap of AMD right now is 237 billion. And I think within the next few years, we'll see it at 1 trillion. If that happens, AMD will be a $250 stock, all that kind of stuff. So, get the 1 year chart. In the last year, right, AMD is down 20% on the year. So people see AMD running from $84 to $146, and they're like, damn, I missed AMD, right? Well, July 2024, AMD was up at 175. So did you really miss AMD, right? So buying shares at 146, yeah, it might be higher than what we bought at, a month ago, 2 months ago, 3 months ago. Is it higher than what people bought a year ago? No, nowhere near, right? So it's just having a perspective. And this is why I say check the monthly, the 6 month, all that kind of stuff. Because I think people get lost in the here and the now, right? 1 month, cool, 20%, 21%, you missed it. 6 months, 26%, oh, I missed it. Year to date, 21%, oh, I missed AMD, 2025, I missed AMD run. Then you go a year, you're like, wait, it was 20% down 20%. You go 5 years and you realize, okay, it's up 162%. So hopefully 5 years from now, AMD will still be up a lot more than it is right now, right? And then all time, 4,500%, right? I told you yesterday when I bought AMD shares at $18 in 2019, where are we? Somewhere around, $16 maybe. Either way, now it's $146. So, yeah. So let's go back to.
Big friend.
Yeah.
In regards to AMD and like the semiconductor companies.
Yes.
Because I worked in it, all I can say is it's probably going to do well.
Tell me about it. I'm happy. I'm happy. I like AMD. I love AMD.
The video blew up, I think. So,
They released in with MI350 this year. Next year they're going to release the MI400 and then probably a 500 series in a couple of years. So you can say that because what that is so that kind of stuff. You know those kind of things, but you know what's up, you know what's happening. I hope you're empty shares. It's not too late. It's not too late.
I have a question. So, like, how do you go about, like, let's say on a weekend, I've never heard of, like, the training week starting Monday. How do you go about, like, picking stocks? Like, I know you have to watch
list, and there's ones that you're already checking. But like in terms of like if you want to find something new, like what's your like do you purchase it before or the
So something new, does that mean what I'm going to trade for this week or what I'm going to buy long term?
no? Let's say nothing long term, just option calls or puts or
I have 3 ways I do it. I have a Yahoo Finance watch list, I have a TradingView watch list, and I use social media and see what's social media, YouTube, whatever, see what's going on, right? So if I was to go, let's say right now it's Sunday evening, afternoon, whatever. First thing I'm going to do, because I'm sure you guys see me posting in the tabs, right? Like, for example, I think I posted one yesterday, swing trade ideas, right?
right.
Oh yeah, AMD. So what? That was,
It's been on your mind.
it's been, I love AMD. Shout out Lisa Su. Yeah, no. So this was yesterday at 10:30. 10:30, where were we at 10:30? Oh, that was before I went to Miyagi's room to take the shots. Remember? So I was looking at AMD. The reason I'm looking at it is because I had an idea of what I wanted to do last week when it was down here, and it started to play out. So the reason I'm saying that is the first thing I do on a Sunday, look at what I was looking at last week. Has it played out or not yet? All right. So it's like sometimes you can think of it as the watch list has already been built, and it's just a matter of removing some of them, keeping some of them on. If AMD was hovering around here right now, today or last night, it's on my watch list for this week as a potential play to run to 147. It already did it this week, so it's still going to be on my watch list, but for different reasons next week, right? But let's say if it just had daily candle here, and here, it's on my watch list to see it blow up this week, right? So the first thing I do is look at the ones from last week, right? Have they played out or not? Sometimes we want to start to play out, and in 2 weeks it plays out, not this week. In 3 weeks it plays out, not this week. So some of them I just go back, scroll through if you're in the Discord, right? I know you're in the Discord, so I'm just saying it in general. If you're in the Discord, scroll through the swing trade ideas. What were they looking at? Oh, he said Disney with a nice pullback. All right, let me go check the Disney chart. Let me go to TradingView. What's Disney doing now? Right? Go to the daily chart. What's Disney doing now? Okay, it's coming back to the moving average. Okay, wait, I'm going to add this to my watch list, right? What was he talking about? He talked about Apple last week or 9th of July, 3 days ago. Where's Apple at right now? Okay, 211. Okay, this could be a good setup, right? Or if it broken past 216. All right, cool. Apple's already gone. I'll leave it alone. So first thing is going and looking at the things that you had already planned before and seeing if they play out. Next up, I would say go into that watch list I've got on the side here, right? I've got Tesla, AMD, Apple. I got Exxon, QQQ, Alibaba, PayPal, Walmart, and ServiceNow. I'll look at those ones individually. It doesn't take. Look, I can do it right now. It doesn't take two minutes. Tesla, stuck at the EMAs. AMD, potentially going to break past the highs of 2025. Apple looks like it's getting ready to start moving up to the upside. QQQ, we at the highs. Exxon, it's already broken out pretty much. Will it continue? Maybe, but it might pull back before it continues. Alibaba looks like it's still just moving, steadily stair-stepping downwards. And PayPal, huge red candle. Walmart, huge red candles. ServiceNow, huge red candles. So Walmart, PayPal, and ServiceNow might be getting ready for close.
Can you go back to AMD real quick?
Yeah.
You said you think it's gonna run past. Now it's kind of away from the EMAs. That doesn't kind of signify a little pullback.
Yeah, it could pull back Monday or Tuesday and break for the rest of the week.
Right?
That green line of support I have at 141. Yeah, I wanted to pull back a little bit.
Okay, and I have another question too.
Yeah.
So you just went through the watch list. Now something like Disney that was put in the chat or the Discord, where does I think
Now Disney was shown off, so I don't know how it popped up for him. But let's say I was him, I probably have it. Yeah, but I probably have it here. If I'm him, I probably have it here. Yeah, it probably has it here. Otherwise, like I said, I have Yahoo Finance too. So I have another place where I have my watch list. You know, Yahoo Finance, right here. I look at the change. All right, cool.
So treat it like a screener.
Yep. Lemonade. Oh, Lemonade is down. Oh, 4%. Let me check Lemonade on TradingView. Oh, okay. We added 200 MA. If we don't bounce here,
Go down to 32. Look.
So basically, we're watching from Monday what it does.
Yeah, really. Because the next candle is the most important one for where I'm going to swing trade for the week. That's why you don't see me swinging that much. I do, but not that much from Friday to Monday. I'm more from Monday, Tuesday to. So think about it. 300 people in the chat, whatever. All and 20, 30, 40 of them are saying, any trades for the weekend, any new trades? It's not just I'm putting out a new trade. It's I'm waiting for Monday to close so I can tell you guys, hey, Lemonade puts. You know, if I say Friday, okay, Lemonade puts, and it bounce here and open up Monday and start going.
But in this case, like it's like, then how do you catch it? Because all it is no major news, just executives are selling their shares.
Yeah. It's people taking profit. It's big institutions selling their shares.
So that's what you got to pay attention to that.
But so this is the problem. If a CEO of I don't know or let's say a company sells 200,000 shares of Lemonade or $11 million worth of Lemonade, it's not news, but it is news. So it's not negative news, but it is. That's what happened actually.
Smart money. It's
Smart money. Smart money. My book, yeah. I'm gonna get my book in a second, but yeah, it's crazy because, like you said, it's no negative news, but somebody taking profit and covering its position is negative news for us. So again, people say I want to swing trade over the weekend, anything to swing. Okay, I have to look. First of all, I have to look for like 20 different stocks. I'm not going to look for 20 different stocks in the 5-minute period that they're asking for a trade, right? That's why the trades, if it's not planned, it doesn't work out. You guys have seen it. You ask me on Friday if I have anything to swing to Monday, and I say Lemonade calls because I think it's going to bounce here. Monday it opens below, and we start tanking. Now you think I'm going to trade the puts? Nah, I already messed up my mind. I was trying to trade Friday bounce, and then it sold off. So I'm going to just wait till Monday. Like you said, Monday is the important one. If we close below,
You're waiting Monday intraday or Monday close?
it varies. This one I probably do intraday. And if I see anything crazy, like it starts rising again intraday, then I'll leave it alone. Because the other time frames will tell me.
You just said that you want to do puts like measure mine.
Say again? Yeah, so if I was down on the calls of Lemonade, I'm not going to go on the puts. Because I'm trying to chase now. I'll just tell whoever told me in the Discord I need a trade, take your own puts. You messed me up. I'll take your own puts. I'm not getting in the puts.
And get away from your strategy.
Look. So this looks like puts right now. Right? 4 hour looks like puts. Sorry. Yeah, 4 hour looks like puts. But again, if I look at the daily chart, we might get a bounce at the EMA right here, 200 EMA. So I'm like, okay, I'm caught in two minds. Different time frames telling me different things. Do I go higher time frame or do I go lower time frame? All right, let me go higher time frame. Now, higher time frame gets interesting because we bounce on the 9-day moving average. Right? We close just below, but it might be a bounce on the 9-day moving average. So I'm like, okay, we might be bouncing and going back. Cool. But then I go to the hourly now, right? And it's why you need to have a structure. Hourly is saying we're not bouncing, we're going down, down, down. So if I look at those 4 time frames and I have to make a decision right now, I'm saying puts. Okay? I will not be surprised if because of the daily and because of the weekly, we get a bounce here at the same time. Different time frames tell a different story. But I do think, looking at this, I think it's puts. Obviously, the higher time frames are actually stronger. So the higher time frames might prove me wrong and bounce right here. It might happen. You never know until it plays out. So again, any trade to swing over the weekend, or should I swing Lemonade over the weekend? My answer, it doesn't really mean anything because one time frame says one thing, another time frame says there's something different. So yeah, let's see. there was, we were talking about smart money institutions, all that kind of stuff, right? So when I was trading Forex in 2016 and 2018, I took a lot of notes on who's trading Forex as well. And it still applies to stocks. One sec, hold on. And you're going to see it's not just us, yeah, it's right here. You can kind of pass around. It's not just us that's trading these stocks. There's 6, there might even be more now, because that was from 2018. There's a lot of different type of people trading, people, companies, institutions trading with us. So you've got to remember that at all times. So I think all of you guys have an idea of, who's trading, but if you read that, you might understand more, who's really trading with us. So again, I got a day trading strategy, you got the swing trading strategy, you got the long-term investing. Day trading is not really my thing. Them 0 DTEs, we'll hit them sometimes, but
Scary, man.
it's scary. It gets scary, and it's too much on your mind, right? You don't want to. Let's say you hit it one time at 0 DTE, you hit 200%, which you've done many times, right? Cool. But now next day you got to do it again. Swing trading, on the other hand, you get in Thursday, you get in Thursday, last Thursday of June. You swing to the first Monday of July, second Monday of July, third Monday of July. You're still in the same trade, and it's compounding. I'd rather do that than trying to hit a 0 DTE every day, every other day, all that kind of stuff. I'd rather do that. Okay. Here's a great stock right now, a great example of a stock right now. That's the weekly chart. Wait till you see the daily chart. Talk about a swing trade, right? All those orange circles. Why would I day trade? And why would I gamble my day trading money when I can just swing something smooth like this? Anyone know where this is going next? Up or down? Everybody should be saying up. Where? Anybody around here? Sorry, anybody who got in around here is eating good, right?
They probably already sold though, unless they got back in.
They would have sold.
Yeah.
They would have sold, and then maybe get back in or not. Either way, if you get back in or you don't, you ate good.
Yeah.
What's the 4 hour look like?
4 hours sweet. 4 hours sweet. 4 hours very sweet.
What about the 1 hour?
1 hour.
Okay, so this is clean, right?
It's not, the 1 hour is not as clean
It's not as
because you see the drop below the moving averages, but the 4 hour on the daily, they're smooth.
Yeah.
They're smooth.
So something like what would you look at? So like lemonade, something like that's not that clean like lemonade. I feel like that'd be harder to decipher.
It is. So when people say, should I hold, should I sell? I'm like, the daily and the weekly could be bouncing here, but the 4 hour, I don't know about it.
Okay.
So yeah, roadblocks here. 4 hour and daily is just telling me where this is going. There shouldn't be a debate about this where this is going. The daily is cold. The 4 hours cold. I think everybody should see what's going on here, right? This is such a nice man. This is a long-term play. This is a swing trade. This is a few nice day trades. This is good all around. Okay. So what we talked about earlier, we don't want to stare at charts all day long, right? Swing trading is my way of not staring at charts all day long. We talked about this already. So this kind of goes back to the roadblocks 1 hour that we just talked about. There's going to be times where the trend is bearish, very briefly, but the overall trend might be bullish. But you've got to figure that out. I've got a weekly chart of Netflix and a weekly chart of Netflix, but one time it was bullish from this year, one time it was bearish from 2022 to 2023, right? So in these times, you swing calls. These are the swing lows. That's a swing low. That's a swing low. That's a swing low. These are swing lows, just to go higher. Pullbacks to go higher. Then you've got the bearish. Entries for puts, and then it's kind of overextended, and it's got a reversal pattern and kind of took off again. Puts, calls on the same chart, on the same stock, but different time frames. But you can always trade different. You can trade the ups, you can trade the downs. It just depends on the market. this is what we talked about earlier, right? Meta, we talked about Meta, how it's one of the biggest companies in the world, has been around, 2 decades, killing it for 2 decades. You've got a crazy CEO who's just, killing it in so many different aspects of his industry. And then they went and hired Apple's top head of AI. So again, that's bullish news. That's positive news. That's news that takes 20 seconds to find out on Google. And that's another reason that Meta increased this week. We talked about news, positive news, negative news, right? It's really killing it. So you wanted to talk about the PE ratios and the financials, right? A little bit. So you got, again, if you was in the live stream yesterday, you would have seen this, but you've got the S&P, the NASDAQ, the Russell, and the Dow. S&P 500 has 503 companies. The Russell has, you got the Russell 2000 and Russell 3000. Russell 2000 has 2,000 stocks, right? And Russell 3000, 3,000 stocks. You got the NASDAQ, which has 3,000 stocks as well. So you want to look at the top 30 companies, top 300 in this, top 50 in this. And then the Dow Jones is not as important because all of the stocks in the Dow Jones are in the S&P 500. So the reason I'm saying this is because for long-term investing, you want to know what stocks you're looking at and what companies are in what indexes. So when the rest of the companies in the indexes are doing bad, you know that your stock is going to do bad or might do bad, and vice versa. So, like, one of my favorite ways to long-term invest is look at the companies with the biggest weight on their index, right? So obviously on the NASDAQ it's AMD, NVIDIA, those kind of stocks. S&P 500 is, Apple, Microsoft, Google, that kind of stuff. But yeah, what we talked about earlier, look at those stocks individually and look at the PE ratio, okay? If it's over 25, how far over is it? Is it at 50 or is it at 60 or is it 70? If that's the case, is it justified by their revenue, right? We looked at Grab. Grab had a PE ratio of 86, and based on their growth, their revenue growth, the EPS, it shouldn't have an 86 PE, right? I'd say, again, 12 to 15% revenue growth is consistent, right? If they can do that consistently, that's good. That's a positive sign. Same with EPS, right? Then our expectations are not too high. If your expected growth is low, like if you're growing by like 2% or 3% every year, I'm not going to invest in that, right? I want to see 12, 15% revenue growth or EPS growth every year, right? And again, a good example is if a stock has a 40p or a 45p or 50p and it's only grown by 5% every year, it's not worth it. There's better opportunities in the market, okay? And all of this will come to you when you start looking at, like this is live stream, so you can, watch it back later. But when you start applying this to what you do, if you go and pick out 4 different stocks, let's say you pick out Marvell, ARM, Taiwan Semiconductors, NVIDIA, and AMD for 5 tech stocks, right? And you realize, okay, 2 of these have a PE ratio of 25 and they've got really good consistent growth, I'm going to invest in this. Whereas one might have a PE ratio of 90 and the growth is really low, you're not going to invest in it. But again, you pick out 5 top stocks from any index or whatever number of stocks from any index, and you pick those out and you try and just go through it, one by one, go through the numbers, the EPS, the revenue, and then compare it to the PE ratio. You'll start to have an idea of what looks good, what looks bad, especially when you go into TradingView and you look at the chart and you scroll left, right? So if I go into View, look at the chart of Roblox, scroll left. Oh wait, Roblox is super high up, right? Maybe this is not a great opportunity to invest, even though the numbers make sense right now. Okay, let me look at a different chart. Okay, I'll go with Target, right? Retail. Okay, Target's 104. I look at the numbers, let's say the revenue and the EPS are good. All right, but it's a $104 stock. Let me scroll left. I'll go to the weekly chart. Let me scroll left for Target. Oh wait, it was $64 one time. Okay, interesting. Let me keep scrolling left, keep scrolling left, keep scrolling left. And you realize, okay, it's at the highs or it's at the lows, right? Whatever the case is, right? And then you zoom out all the way and you realize, wait, Target was a $250 stock. Okay, wait, I thought I had missed the run. No, I haven't missed the run, right? Target can be up at 250 again in 2, 3, 4 years, right? If the numbers look good, the revenue is good, all that kind of stuff, it's consistent growth. This is a great opportunity. So you got to just do that and look through it, and then like I said, step by step you'll work your way through it. So, any other questions about that part? Good. And then, like I said yesterday, find out what like the market's being driven by. If people are talking about tariffs, interest rates, if it's about AI or tech, whatever's in or hot right now, maybe that's where the money is flowing, and that works for your long term. That works for your trading, your option trading. Figure out where the money is going. Figure out where people are flocking to. You guys know how sector rotation works. You know, money flocks to different sectors at different times of the year. You know, whether it's industrials, financials, healthcare, technology, energy. Money flows to different sectors at different times. And then, of course, always watch out for the FOMC, the earnings reports, the GDP report, PPI, CPI, any special events. Apple sometimes hosts events, announcement events. Sometimes someone will be speaking. CEO will be speaking about their product. The CEO of CoreWeave went on CNBC a few weeks after they IPO'd, and you saw how that helped the stock fly. It just depends, but it's all there. It's all there for you to watch out and look for. And then I talked about this yesterday, which I want to go into right now before we have a break at 3 minutes. So write it down. I want to buy, who has the book? Yeah, slide that this way. I'll buy Apple stock if it, wait, let me even go to this. But yeah, write it down. I'll buy Apple stock if it hits $200, right? Apple stock for me is a buy at $150, right? Or whatever the level is, right? Write it down. It can be on your notepad, it can be on your notes app on your phone, it can be, pen and paper. I have a list. I think one of my notes tab on my phone, I have one in the Discord, in the long-term growth section, and I have written down on pen and paper when specific stocks reach specific price points, I will buy them for that price. So I say write it down. It could be 10 stocks, it can be 5 stocks, it can be 2 stocks. SoFi at $7 is a buy for me. Uber at $80 is a buy for me. Apple at $150 is a buy for me. Marvell at $62 is a buy for me. It can be a level of support. It can be when it's pulled back 10%. It can be whatever. It can be a round number, whatever. And then what I also want you to do is not just write those down. Slowly get comfortable with start setting orders so you can buy those stocks at those price points. I'm telling you, it's gonna make your life a lot easier when you tell yourself, I want to buy PayPal at $58 when it reaches that level. And then when PayPal pulls back to $58, like it did back in April, you're buying it. And if you put in orders, it's buying automatically. Your shares will be bought automatically. PayPal is a great opportunity right now as well, by the way, long term. Let me just drop that gem in there. I think $120, $125, $150 for next year, my price target. PayPal, long-term stock, again. I've given you PayPal, SoFi, Cheesecake Factory, Nike, AMD. Those are 5 gems right there. And there are more. We'll get into those more. So any question before we take a break right now? Nice. All right. Let's get some food, drink, that kind of stuff. Yeah. Thank you. Yeah, folks, write those goals down. Let's take a 10 minutes.
Why do you like Cheesecake Factory so much?
Why do I like Cheesecake Factory so much? That's a business model that's not going away anytime soon. People are always flocking to Cheesecake Factory. Every time I walk past Cheesecake Factory, it's busy. It's full. That means something.
Yeah.
I know we're on our break, but let me put Cheesecake Factory on the screen though. Oops. Come on.
I had no idea that it's still like doing that well.
Every time I walk past Cheesecake Factory, it's flooded. I mean, I bought shares at $48 a few months ago. I really wish I got them at $30 and stuff last year. I didn't really know about it like that until I kept walking past and I kept seeing it. I'm like, this place was packed.
Yeah.
I said, yeah, they got a stock. Okay.
I know there was like social media that we used to talk about it years ago, like all the time. Like they would just talk about like Cheesecake. There was like
Yeah.
Cheesecake Factory, like with your date.
Yeah, exactly.
But I didn't know that it's still like popular.
Yeah,
So for this, is it
a little bit. But long term, it's still going to go up.
Is there a ceiling here or past that green line?
It's past my ceiling was at $61.50. It keeps going up. I like Cheesecake Factory though.
See, this is the thing. If it's away from the EMA, it's just like I don't know.
So you what? Wait, so you saying what?
Because it's away from the EMA.
Yeah.
Does that mean it's like, all right, now we're gonna come down, bounce over a little bit,
And then-
or just
Yeah, exactly. But I'm not too worried about it. I'm in it for the long haul. I got it.
oh, you got the shares.
I got the shares. $48.
So what about United Health Group?
We can talk about that one. Yeah, that was.
I picked some of that up on the shares.
That was a good one to pick up.
There's a handful of stuff.
Huge drop, right? Huge drop.
Big drop. Yeah, Meta. That Meta.
Prince will take a walk. Some people want to.
Yeah, hey, let's take a. I don't know if you guys saw the local market. Let's take like a 10-minute break. I'm gonna walk out to that local market and then we can come back here at like 3:12, 3:15. But I seen that market was looking good, so I want to see what's up. Yeah, they should be set up. Got some good food and stuff right there. Good food, quick drink, some nice fresh fruit and all that kind of stuff. So later, yeah, I'm just gonna have a quick peep at what's going on there, and I'll be right back. Yeah.
It's fine.
You sold it up. Oh, yeah. I see you using finger split on the desktop. Man, I try using Rocky. It takes me a lot more. I was like, nah. Trading view is like a little simple. Yeah, simplify. So I use a trading view. I use a thing some app, right? So execute, do my brackets. But I hate the way the chart looks on Thinker Swim, bro. Like I hate the way the candles look. What I like about it is that we able to create studies.
I do like though with trading, set the alerts.
I've been setting the alerts like crazy.
So you can trade it like a week if it hits your alert or something like that.
Yeah.
You have to check it though.
You gotta check it. That's the only thing. Because you can do it whatever. That's why remember I said last night, long term. Long term is in general, just you scoop up, trade it, you become this long term.
It's good. Yeah, it's good how which one's long. Now it seems like that's so far.
I know, but it's so far.
Like say you put it in 25K.
Yeah.
I'm looking at a share, it's like, dang, it's not like $60, $60. Or even Meta, like, I want to buy that.
I got Meta. So here's the crazy thing. But you said it's expensive. But now the way these companies have to buy fractional shares. You buy fractional shares. So I had a portfolio. It has Meta. I don't even have a share. And I'm on 273%.
For when? For a year?
I was dumping bread early, like just buy it low.
Yeah. No, it's good.
So I had to look at that. So that's my problem. So
Yeah, I don't want to say that, but yeah, so I researched it.
No, you can do it. Where you can get full shares. So I bought some shares. Or if you want to dump bread, you can just buy it individually and just add it to the portfolio versus having an automated. Yeah, because it's gonna go overweight or underweight. So I basically, yeah. So I buy these, right? So I got 100%. AT is just 8%. Right? Microsoft 210%. Microsoft.
Yeah, right now, like, I know is
that's the great thing about it. You're not thinking about it. You're not, unless you know something, you jump right directly. But other than that, I just, but you get paid, right? It's way better for long term. Long term. So dollar cost average is just you do buy it at dollar cost average. Matter. I'll show you what. Let me show you this. I'm gonna show you my I got wrong. See, this is what you did. You get the gold, you just basically buy the way it is. I ended up doing my own. You know what I'm saying? So you're good. Yeah, I don't bread in that pouch. And then I'm raw. I scooped that up early. Nah, this is smart. Smart.
Yeah, it was crazy. I was there $5, $10 to crazy.
I started with account. I started with account. I had 636. It was just like from 667. Oh, just automatic, like you like 300, 400. I got this is my main one. The Roth is smaller. The Roth is separate. So the Roth. This is Roth. So I got 3%. Oh, you put my Roth.
So for instance,
but I got such a small percentage in there. I got TQQ in there. I know you never. I got a small percentage. I just launched these, which I'm really happy about the dividends. I just did this like last month. Why next Sunday? So weekly payments.
I have to watch the dividends though, like to check it. And things like can't go down, the price go down.
It can.
Like so far this year,
Side income, dog.
every week. You guys
I'm gonna learn all this shit, bro. Now I'm always gonna have all my charts, weekly, the daily, the 4 hour. So like, what's confusing is this. This was confusing. So on the weekly, oh, I need to no, it's just an indicator.
oh, I do that. I do that. Yeah, I'm just gonna have to like just message something like I need all the indicators.
Yeah, I love that. So look, this is the weekly. This is the 1 day. Right? This is the 1 hour.
But they say you execute on this. What kind of candle is that? What kind of candle is that? We gotta wait for that to close, and then you gotta see it. But you were wanting to do that. That's the hour. That's the daily. 1 week, 4 hours. They might say that you want to see it around here, right? But because you need a candle, you don't want a false breakout. So you wanted to basically close around here. That's the daily. It's above. So yeah. So it's at the difference. It's a raw. It's a raw. It's a raw 50, right? That's just a chart. And then here is what shoulder.
This one, trading online, they have that bunch of screens.
That's what he does. He does it for market structure. But really, showing up operates off the different. No, it's a 50 EMA. Yeah. But it looks where it needs to be. You see what I'm saying? Keep basically showing up, right? Showing up inside the company. So you'll do something where you look at all the charts, look at it, look how the chart fits. Follow the draw. Checks that he usually tries to get it all. Like basically for retested bounces. That's all. 50. Just 50. Friends uses 9. You know what I'm saying? I use 9. I show.
Yeah, 50 is for like big swings. Like shows the
Big swings.
Yeah, well,
2 weeks,
the
good
way
percentage.
the way to think of it is the number 50 means 50 days. And 9 and 21, those are 9 days. So it's like
They say on my lifestyle, I need that. I need time. I need it.
yeah, so if you're like weekly, yeah, things that are within that week, you don't really need to worry too much about them because it's out of your scope. You gotta zoom in. Yeah.
So you got
Monthly, because
3 4 weeks. Yeah, I want that. I'm looking for that. Because the thing is, if I know how to read it right, I can go ahead and look like it's but based on the data, I know it can go up 15 months based on the month. I have to change
who are you in
the interest measures, you know what I'm
Yeah.
So he usually wants
Just
to
probably
see
hit
it
a
bounce
top
off.
again. You probably haven't seen
Right? I gotta ask. I went on one call that's still breaking down. I didn't get another. I gotta ask him. He operates. He draws his fish on the weekly, right?
Why is that?
On the weekly, he draws the fish, and then he takes the position to trade.
Well, it's like part of this was supposed to be it's like, well, we never got
That's what he did. Always a
But I was like, I'm a little sad that the has been here for a long time.
on the daily. It's different. That's what I'm trying to find what my flow is. You see what I'm saying? My style. You know what I'm saying? So like, like I said, I love this show. That's why you can see that shit.
Yeah.
And he just operating off that. He got one line.
That's part of it. Trying to figure out, as a teacher, trying to figure out how not to overwhelm your guys.
That's why I got it on the
Yeah.
table.
I have to understand that. Because I'm like,
Oh, that's a fun. It's like a little retesting sport.
yeah.
It's pretty good.
We have to like kind of mold it to better understand. How far it just takes people to just put out information, but if it doesn't like resonate in their brain, you might as well just stop it. So sometimes it's important to figure out like actually like getting you to do it yourself.
After you look at it, makes sense.
Not that it's find stuff and then like take 2 minutes or something.
Yeah, that's not so. I caught my mind.
Well, and there was this cool thing. So you're really
So I only do it on the
you see how it says trading view? So this is like a trading platform, right? So they have a really cool thing on this platform where you see all those candles. It's like it's keeping track, right? Trading view specifically has a function where it'll erase like however many candles you want. And it'll rewind time. So you say, just rewind me back like this. And then you read the candles yourself and you tell yourself, okay, based off of this, I think it'll go up. And then you tell Trinity to show me the next week.
You're not speaking on time.
Yeah, so let me show you. So you see how like in 2025 here, right? So let's say you're using TradingView, and right now we're in July. But if you're on TradingView, you can tell it there's like an option somewhere for like you can tell it I want to only see up to May. So it'll erase all of these candles, and it'll only show you like from here to back.
Gotcha.
And then you can like study and say, okay, based on what I'm seeing here, and I see this candlestick pattern, I think the next direction from here will be up. And then you tell trading, okay, now show me May to July. And then it'll uncover these and show you if you were right.
Basically,
Get clarity, right? That's doing that without touching the pit.
Yeah.
So that you would do that and then come over here to see the time frames of made.
Yeah.
Time
Well,
frames.
you don't. Yeah, you can do it on different time frames. Yeah. I mean, let's just say we're sticking to this one. Right?
Yeah.
There's some button somewhere. I don't use it very often, but yeah, you can run that. I think it's like maybe it's rewind, but you can tell it to rewind time. And the best part about it is like it doesn't just rewind time. It like takes away the candles so you're not like cheating. And then you have to force yourself to like actually learn and like figure out where you can mess up. And then it'll say, and then it'll uncover it and be like, yep, you're right.
So what's better to gauge this right here or this right here?
It's hard. It's all candlestick pattern type of work. But I was just mentioning that because that's a really good like studying tool, especially to like get your hands in on it. Like you can rewind this and see. Pretend you're in that day.
So where we at? So see where it wind up. So right here, we're at 38. We retraced 38.20%. Yeah. So usually, so here, that's what he said, maybe like a foot. Because it's retracing at 38, it's not even all the way down to where it could go. It's not even down 50%. You still got ways to go. Like agitation, it could go. Remember, this is the other high low, right? It could go back if we want to touch this. Let's say we want to cross on here. It could go down to 31, 33. So that's what it gave us. 31, the EMA is 31.57. Yeah. For instance, like 3157, so you kind of know where it's at. So you can go all the way down there. Right now it's at 3818. So now basically, let's say for instance, it goes down here, that means it retraces over 61.8%. I never used it, but when I think it was Bobby and then that's everyone got different strategies, so you got to figure out what's going on. But I just want to know, like, for instance, when I get a call out, I can go do my research. If for instance, let me go look on based on how he do it, you know what I'm saying? Or if show like, I was like, he throwing stuff in there, but I don't understand. He be throwing stuff in here, I was like, bro. I don't even use it just because I see they like these guys. It's just like added a little thing, a little check box. You know what I'm saying? Just that. That's it. That's just that. That's the EMA.
Okay. So it doesn't have it up there. When you press that, you see it. But these lines here are different EMAs. They're called exponential moving averages. So it's basically calculating a certain number of days of candles and then putting a data point here that says, okay, based on these candles, this is what we expect it to be going or moving in. And then what you need to do is not necessarily worry about this line, but worry about where the candles are in relation to that. So like for 9, this is 9 right here. 9 it takes the last 9 days. So it'll be very close to the candles. Now this one's probably like 20. And it takes the last 20 days and it makes an average number. So this one will be a little bit off from the candle just because the average is a longer period of time. And then this one's probably like 30. So it'll be farther away. Like the less days you use to make your average, the closer you'll be to the current data point in the chart. Right? But what these do is you can use these as your guesstimation of where the stock is going. So you can see, like, for the green line, it kind of follows it pretty closely, right? And then the orange one, it's still following it, it's just not following it perfect, right? This orange line doesn't catch as much of this dip as like the green line. Now this red one is way more like smooth. It's not catching all these little dips, but it knows that overall it's going up. So what we want to do is when we're trading, depending on like the time frame, let's say weekly, right, which is 7 days, you probably want to look at the 9 EMA more often than the other ones. Because the 9 day is closer to that 7 day weekly time frame that you trade in. Now for Show, like you were saying, Show Nuff, who was one of the professors, he likes to do bigger swing trades, right? So he trades like over months. Months has 30 plus days. So he's not, the 9 EMA would not help him at all. Because he's like, I'm trying to stay in a plane way longer than 9.
I got in around.
So he's gonna probably be looking at this one, like this 30-day one, right? Something like that. Because he wants to just know what direction is it most likely to go. Now, on top of all of this, if the candles cross those lines, like let's say, this is like over here, right? You see how this one crosses that red line? Once it crosses, you know that it's not in good standing.
All three and four.
When 3 of them cross, for sure. Well, I'm just looking at this red line. If you ignore the other ones and just look at the red line and compare where the candles are related to that red line, once these candles cross that red line, that's probably very good for you to trade. Because that red line, right, is a big average. So once it crosses it, that means it's going to take a while for it to cross back up. So that means it's going to be doing some get sad. It's going to be sad for a while until it finally recrosses over. So it finally recrossed over right here, right? It like did a little bit of catching up, but it never recrossed it again, right? It just kept bouncing off of it. So you can use that.
Let them hear as well.
My one question is, right?
He's new.
My one question is this, right? This right here, right?
Yeah.
When it's just pointed up. My question is, all right, boom.
Hey, what's up?
When you enter it, right? Would it be entering off for like a weekly call, or you gonna do it for monthly? Because you're going off the red line, which is a monthly, right?
Yeah.
When you enter it, you're gonna enter it off the week. Like the swing trade is gonna be for a week expiration, or
No,
a
it's
month,
good. So a
month
swing
expiration?
trade for, like, we're pretending that this is like weekly candles. You would want to trade it way longer than a week. Now, let's say, because this is weekly, right? These are weekly candles. If you went to 15 minutes, it would be a whole different story. And you probably look at the 15-minute or the hour or the 5 when you're doing weeklies, right? Because you have more candles that still make up 7 days.
No.
Whereas for 7 days on this chart is one candle, one single candle. Yeah. So let's say back up, we're doing shows method, right? We're looking at weeklies and we're going to play like a whole damn year. Then he's looking at this. So like you were saying, once it hits here or it hits here, you're in June and it went all the way down till September. So you're fine if you're staring at this and you see it cross that red line. You're probably fine to like buy a contract for like 2 months, whether it's a put or a call. If you see it, like let's say it did cross this line down, you'd probably be fine to do like 2 months out for a put.
There's no weekly chart, right?
Yeah, specifically because this one's the weekly chart, and that red line is like a very average line. I don't know what the actual
That's
number
like
is,
a
but
200?
I think so.
Yeah, 200 EMA.
Okay.
Okay. But yeah, that red one is the most like, how do I say it? It's the smoother one, right? So it's taking a wider average than the other ones. Remember I was saying that we pretend it's a different number, but yeah. So if basically like it's like signs of seriousness. So if these candles cross the green line, it's not as big of a deal because this green line is estimating very small. So it's like it crossed it, but then it recrossed it again the next week or something like that. But then like this red one is looking over so much more data that when it does cross over to the downside or the upside, it's going to hang out there for a while.
So it's like a more powerful indicator?
Yeah, to an
200,
extent.
200.
And that's probably why he made it red, because it's like red line means bad. It's like if that shit crosses that, it's not bouncing back for a while. Now, obviously, there's times where it bounces off of it, and that's another useful tool that you can use these for. Is like you can use it as like a fence. It can bounce off the fence, or if it crashes through the fence, it crashes through the fence. It's gonna take a while to come back. That's all I got.
That was pretty accurate. Thank you.
Yeah.
Thank you. All right, we're gonna finish strong now. Okay, so what we got to finish out the last 30-40 minutes before we drink and party and all that kind of stuff. As I said before, right, write it down, but we got to finish out is obviously the fun part. You guys came in person. It's time to ask all those questions, the questions that people be asking in the Discord at 2 a.m. on a Saturday night, those kind of questions. It's time to bring those to the floor. And then at the same time, we're going to talk about anything you're struggling with, which you guys wrote down on a piece of paper. Has everyone had a chance to write down on a piece of paper what they struggle with in the market? There's no names, it's just anonymous, it's just writing down. Because if you haven't, please do. We'll address it. I'll address it today. I'll address it before we leave tonight. I'll address it tomorrow. So yeah, so now it's really about the questions and kind of just brushing you up on what you guys want to really focus on. Obviously, I've talked about what I think is important, what I want you guys to know. And then, what was another thing I wanted to talk about? Oh yeah, we're going to look at some charts, the usual stuff. So I'm gonna put this screen right now. This is from the last maybe 3 years, 4 years. You'll see some different returns, right? So you look at it, right? And okay, what stands out to you when you see this kind of stuff?
What stands out?
Yeah.
Percentage.
Yep. Why is that?
Because you have high percentage and you also have low percentage.
Okay. It's a variety of trades. Some trades are going to be 100%. Some trades are going to be 500%. Some trades are going to be 589%. Some trades are going to be 686%. I'm happy you guys said the percentage stands out to you because that's what's important. If you're trading with 2 contracts and you make 80%, 90%, you see someone trading with 1 contract and they make $1,000, but it's a $1,000 contract. Sorry, they're making $1,000 of a contract, but that's only a 10% return. You should be happy because you made 80-90% returns. You guys highlighted the percentage. Percentage is important, not the dollar value. Percentage every time. Percentage every time. A lot of people online will have huge portfolios, right? They'll make 30% gains, 20% gains, and they'll be showing it off as, you know, I made 50K this month. 50K this month was 20% for them. You made, let's say you made 200, 300, but that was 300%, 400%. You're doing a lot better than you think. So I want you to focus on the percentages here. Focus on the percentages here when you trade, not the dollar value. Everyone's portfolio size is different. Do we all have the exact same portfolio? No. Do we even use the same platform? Probably not. So percentage return is really important, and that's what you should focus on. So again, going back to being a beginner, being starting out trading, I think if you've got 1 contract, 2 contracts, and you're looking at, trying to squeeze it out for the most money possible, that's not always the case. If you're already up 100%, 150%, 200%, learn to take the profits, learn to be happy with those percentages, and move on. And then I got a little quiz. Like, it's nothing crazy, but I just want to test, what you guys know about stocks, options, whatever, right? So first one, CEO of Apple. Anybody? There you go. Correct. Tim Cook. What does it mean to exercise an option? What price is that? Okay. Which country is Nike known to source from? And I say the main country. There we go. So you guys know a little bit of stuff, right? So the reason I did that is because, and it doesn't matter if you answered or you didn't answer, whatever, but there's some things you should just know. Just because you're trading in the market, you should know. You don't have to have Apple shares to know Tim Cook is the CEO of Apple. You don't have to have Nike shares to know that they source from Vietnam. But the reason I say this is because if you see a headline that says Tim Cook announces he's going to focus on politics. Let's just make something up, right? You should know, wait, CEO of Apple is focusing on politics. He's not focusing on Apple. Apple's going to start dropping. You should know that. It shouldn't have to tell you CEO of Apple says he's going to focus on politics. You shouldn't have to know that. You hear Tim Cook is focusing on politics and moving away from his company or whatever, you should know, wait, that's bad for Apple. If you hear tariffs, 150% tariffs are announced on Vietnam, that affects Nike, right? Because they source their sneakers, their clothes, 50% of their stuff from Vietnam. So you should hear these things, make the correlation with stocks, right? If, it says, what does it mean to exercise an option? If you guys know that exercising means buying 100 shares, if you accidentally try and sell, and then your Robinhood or whatever is telling you you're about to exercise, you're going to be like, wait a second, exercising means buying 100 shares. Wait, I'm clicking the wrong buttons. So that's why I gave those 3 quiz questions, but just because there are things that you just need to know when it comes to options and trading. It's not only about the dollar value. Again, going back to what I talked about percentages, it's not only about the dollar value. It's not only about trading someone's calls, puts, making money, and then making a lot of money off someone's alerts or call outs. It's about percentages. How you're increasing. It's about understanding what factors affect stocks, what factors affect companies, those kind of things. So let's get into the questions. I'm gonna start with, where's the paper? I'm gonna start with that. Okay. Any questions right now? This is the last 25 minutes, so we're gonna close out with the questions. And obviously you guys are here live and fresh, so let's use the time to really go through them. It can be charts, it can be financial, about myself, anything. Just let me know. And don't be afraid to ask whatever you want to ask.
So what made you get into teaching, actually? Because you could just learn how to trade and just own your own. What prompted you
So what got me into teaching is because when I first started learning and all that kind of stuff, I used YouTube as like a way to document it. So I have over 1,000 YouTube videos. Some of them about like the most basic thing about company financials, FOMC, random stuff, GDP, whatever. So when I did that, I started to document it on YouTube. I think the first year it had about 12 subscribers, not many subscribers, it's fine. I wasn't really bothered about that. And then it started to pick up a little bit. And I realized that when people say, oh, how do you know when a company is good to buy? How do you know when this and that, you know? And I start talking about those in videos and I realized this is a lot easier than I thought, you know, to help other people understand it. Now, during the first 2-3 years, I was still learning, obviously, but I realized that I was learning by teaching. And as I teach, as I speak more, I also learn more and it helps me. Same way we looked on Google and we saw UPST and AFRM have negative EPS. Same way I'm like, shoot, you know, along my journey, as I've taught, as I've spoken to people, I learn more for myself. So the more you talk about it, the more you're also learning, right? It's like being in stuff. So which is why the Discord for the first 2 years was just free, because I was like, well, let's just talk about stocks, right? Let's all come together to talk about stocks. And after a while, obviously, you realize as you get bigger and stuff, you know, you attract people who are not as serious and all that kind of stuff, but which is why it becomes a paid service. But yeah, that was it. I was learning, I was documenting my journey on YouTube for the vibes. And as it started to pick up a little bit, I realized, oh wait, the more I talk about this stuff, the more I learn. Because if someone asked me to make a video about why I bought Facebook stock, I explain it, but then I also go and do more research about, because, you know, should I buy more Facebook stock right now? You know, is it a good opportunity for them? So the more you teach, the more you learn as well. But that's a good question, right?
And are you like, and just for money?
Yeah.
Like, are you making money monetizing out of Twitter, YouTube, or is like
No,
Discord?
unfortunately not. Only Discord. Yeah.
So you're just building those brands to bring traffic.
Yeah, traffic. Yeah. The aim. So the YouTube has always been like my favorite. Discord obviously takes more time now, and it's obviously more profitable. But YouTube has always been my favorite because you can just put the video and it can last for 10 years, 20 years. You can come back to it whenever, and it's still relevant, right? And YouTube, what I like about YouTube is because you can just speak freely, and it's not like a question, like like what we're doing, like Q&A, right? YouTube, you just put it and then it's there. You know, while you're making the video, nobody's really asking you or commenting. You just make the video and you do it, right? Live stream is a bit difficult because people will ask you questions during live stream. Sometimes you can get sidetracked, you know. But yeah, YouTube's always been my favorite, but Discord's obviously more profitable and all that kind of stuff. People pay. And then Twitter, I don't get paid off Twitter, so that sucks. But yeah, that's a good question though. How to buy contracts. But I always do find it funny when people, you know, they're in the Discord and then within a year or so, they want to do their own stuff, which is fine. I have no problem with that. And they realize how difficult it is, and then they stop ASAP, right? It's not easy, you know? It's not easy. So, yeah. Right. Knowing when to hold after seeing profit. We kind of did answer that, right? Price targets, being happy with a percentage, knowing, you know, you can leave runners and be happy with it and move on. Knowing how to screen stocks to play options. Yep, you kind of covered that. I know some of these are from yesterday, so I'm just going through them. I showed you guys Yahoo Finance watch list, just to recap. TradingView watch list, those kind of stuff. And then reading charts for both swing trades, day trades. Swing trading for me, swing trading is much easier. When you see consistent patterns like we saw with Roblox, you know, it makes life a lot easier. And then how to buy contracts in Robinhood. So I can show you guys. Should be connecting now. If not, I'll come back to it just so we don't run out of time. Adding additional cons to dollar cost average. That's such a tough one. If you have enough time in the contract, average down. If you're in a Discord and everyone's buying up, sure, it's not a bad time to dollar cost average. What's the time frame? But so time frame. That's a good question. I'd say if you're swing trading, the first day, give it a day. If it's smooth, if it's consistent, it's okay to jump into that trade. If it's kind of struggling, leave it alone. If it's smooth and it's consistent, it's, you know, it's rebounding, coming back, like what Google did yesterday. Google's a great example. Google went down, and then before you knew it, it was coming back. That's the time to dollar cost average. No. Yeah, after the pullback, when it was going down in the morning, I just told people hold your Google. Now it started coming back. Now I said, okay, now buy your Google, buy. You know, Google's gonna blow. Yeah. If you buy on the way down, it's tough. You can keep going. But when it started coming back, I'm like, okay, go in. And people are like, oh, is it too late to get in? No, it's not too late. It's now coming back, right? So, yeah. That's a good question, though. Time frame, give it a day. Google was a great example yesterday, and I didn't actually buy more, but I was already deep enough. So, and I was traveling, you know, fixing the hotel and that kind of stuff, focusing on this meetup. So I didn't buy more, but I kept what I had. It paid off, right? All right, we've got 5 questions left. Defining my personal strategy when it comes to swing trading. I think we'll have to, whoever asked that, don't worry. Just speak to me personally. I think it depends on your portfolio, how you trade, your job. So defining my personal strategy when it comes to swing trading, understanding swing trading as a whole. That one, whoever wrote it, feel free to speak to me about it later because it's more personal to you, right? If you're not able to stare at charts all day, or if you're only able to trade Monday and Wednesday, so speak to me whoever it is, and then we can get into that. When is the perfect time to take profit, avoiding greed? Yeah, honestly, again, percentages. If you know I want to take profit at 50% every time, take profit at 50%. If you know tomorrow the option, or today option expires, and you're up 45%, and it's kind of hovering around at 45, it's going to 40, it's coming back to 42, and it's not completely 50, but it expires today, you see it's kind of just hovering around, take the profit. Read the situation, analyze the situation. That profit taking will make you a much better trader, right? They say no one ever went broke taking profits. I mean, if you take profit every single time you're in profit, you're probably not going broke. You're probably not going broke, really, realistically. So not being, you guys put a lot about greed on it. Not being greedy.
FOMO, man.
A lot of greed on it. Not being greedy, a modest profit is great, yeah. We get so caught up in the 200%, 300%, 400%, it's great though, it's great, right? But it's not gonna be every day. It's not gonna be every day. When it does happen, it's great. I mean, we've been on a hot streak recently, so it kind of makes things a bit like more difficult to teach people taking profit 50, 60%, right? Because we've been on a hot streak, I'll give you that. Like, we've hit some bangers, right? But realistically, it's not always that. It's not always that. It's not always that, right? Them 50s and 60s and 70s, they're more than enough. There are traders, when they got a bigger portfolio, who take profit at 20%, 30%, 40% every time. And they eat good. Trust me, they eat good. There's a guy that used to come on my YouTube videos, Keenan Grace, and he's been taking profit at 30% for years, and he's done really well. Multi-millionaires, just 30%, 30%, 30%, right? So, and then the last one, I need to know when to. Okay. So this is again percentage targets. So you guys have a lot of similar things about what percentage chasing. It's up to you. How much are you happy with? If you're a new trader, 20, 30, 40% is fine. If you've been trading for a couple years and you know how to hit a 50%, 60%, then by all means go for that. But if you're a new trader and you've never seen profits in the market, you shouldn't be chasing 80%, 90% out the gate, right? But if you hit them a few times, especially if you hit them alone, then yeah, chase those 80, 90% returns, you know? I always say for my trades, realistically, 100% is what I'm targeting. It's not always going to happen. Of course not. You're not going to double your money. If you double your money every time, of course, you know, it would be amazing, but it's not the case, right? So when it goes more, when it goes, you know, when it goes higher than those percentages you're chasing, take those profits and move. Stack, compound, and move on. Any other questions right now? Otherwise, we can get back into the social aspect, and then we can just, do a little talks and stuff after you close out.
So you turn on everything, right? All the trades.
Yeah. I have a spreadsheet. We'll go through that because I don't know why this isn't going anymore, but it's fine. I have a spreadsheet. I'm going to send it around to all of you guys. I'll probably just do an email. So just if you can all write your email on the back, I'll just share it with you by email. whatever email you want to send spreadsheet to, it's going to help you track your trades. If you choose to use it, fine. If you don't, fine. If you pass it to a friend, either way, it's fine. Whatever. I created it, so it's just to track your trade. It tracks the date, how much you got into the. It's going to tell you the stock, how much you got into this, how much you paid for the contract, how much you sold the contract. It's going to calculate your loss, your win. You can also put any notes for yourself at the side. It's going to help you, trust me. So yeah, let me close out this live stream on YouTube as well, though. Hopefully you guys enjoyed it. Make sure you drop a like, and if you're not in the Discord, make sure you come through the Discord or get the option pack as well. Anyone here got the option pack? Okay, you got it. Okay, cool. Yeah, you got it as well. Yeah. Okay, get the option pack if you don't have it already. But thank you guys for watching and tuning in. See you guys later. Peace. Okay. Yeah, so for you guys that are here, I'll send that spreadsheet to you guys. I think everybody's going to benefit from that spreadsheet. So if you want a spreadsheet, just do an email and I'll send you a spreadsheet, that kind of stuff. And what time is it? Right, 3:50. We can use the next 10 minutes. They filled up before. We can use the next 10 minutes. Ready? Right. When he comes in, let's give him a round of applause. Who do you think is? Give him a round. This is a professor, guys. The RTA professor. Is it the audience? Right as I'm closing it, right? No. Ready? Hey, make sure you give us a little clap. Ready? I just finished. Oh yeah, thank you guys so much for putting through. Let's just vibe now and talk about stocks and stuff like that. More of a social aspect. Yeah, I'm gonna come around to you guys. We'll close out for the last 10 minutes. So feel free to speak to me immediately, get some training, advice, and stuff like that. Right. Good. Yeah. Well, I mean, you remember it, right?
Well, how do you find it?
Yeah, it's her.
Yeah. It's one of the balance seriousness yeah.
Or even this. Right, you know what? It's 4,000. So you might want to trade accent or
Yeah. I'm exactly what we joked about that. Almost there. I'm gonna go to yeah. I hope to make it. Yeah. I hope to make it. Because I do my two tests. I do stars, so we don't see each other, but I had a thing. Yeah, so I thought they did it. Yeah, it's just kind of I like how fun it's like. Yeah. Not necessarily all definitely San Francisco. I'm like kind of middle, like a little bit above that. And then Collins, I don't know. Yeah, a lot of people have been there for very recent, so I'm like, and I'm not in there too often, so it's like, I don't like do like that. I don't consistently make it up. Yeah, on and off as well. Like I'm more of the supporting the back end, like managing. Yeah, there's been a lot of, I put a lot of work into that. Yeah. Well, so we started in 2021. And there's a big, so many other things. So we kind of, at least for me, I just gathered what I could and what I just saw how they were kind of set up and tried to not necessarily copy that. I try to emulate it so much. I'll have some fun. Ready? Had a leak. Especially so you're not in those roles. There was a time when it wasn't as big, but there was a time when there was a channel that was supposed to be like private, not because there was anything like crazy in there, but we just didn't want to get very much into people. And no one said anything, but then at the end of the day, like, no one said anything. Yeah. Yeah, but that helps too with like when you first join yeah.
Standard deviation. So this is the calculation for what it is. You don't need to worry about all the actual numbers itself. This is what you want to use. So think about it. So my function, it's a real number, yes, real number.
It throws like entry into Discord. They were like, I guess like, yeah. So they're confused, but it's like overtrained, and it's not consistent.
Yeah.
So they just expected
58 trades. So you pay
yeah, are you doing something else before like
average return, average. What is it? What are your goals? I guess that's individual, right? Your average return goal or everything, yeah, I got your position. So, like, see, like, I just like, I didn't have a structure, like, I should be targeting 50%. There's times where, like, I'll be in that position real quick, and I'll just take 25. You know what I'm saying? Where, like, here, the Google, I took 105%, which is called felt confidence. It hit the target. I took 79% here. But this year,
That's just the conflict, but it's still in the
what I did wrong. I actually made 87.5%. It's not bad. But what the thing is, all right, if you're in my position right now, what should I do? So I'm gonna go look at the ones I lost on. Right. So here's where I'm at right now. Unrealized, right? Docu, Visa, paychecks, right? And then slide, and then I bought some shares of Now, I sold CRV at a loss, right? 12 cents. 6 contracts.
And then there was another one. So I'm down so far, eliminated. I'm down, okay, 1,000. How do I use logic, not emotion, and what should my approach now? Like just doing one or two calls at a time, like get back up.
You have 2,000 left?
I got 1747.
Yeah.
Yeah, we just wanted to ask you the next one, do that a long time ago. I was like, yeah, that's what I want to do.
And then,
70 Yeah. I mean, hopefully this is concerned behind me this big one, but I already got my stop losses already for that. So if I'm able to make something off of that, I'll give you some more capital, and then I can just keep the 70. Because I want to keep it separate. I want to keep the Robin with it. I want to mix it. Robin, I got a good running rate. I don't want to throw in. Jump all over the place. So if I can build how I structure it, Robin was and it's cash flow. So buying power. That's my buying power. So I want to make sure we need that data for 1 month. And then I can build up back up.
Yeah, I'm making my rounds.
No,
because we don't have that long. We have to close the build space. So I'm making my rounds. Yeah.
So before, so you're looking at it.
Okay, yeah, what is it?
So.
Yeah, I saw that.
I'm expecting a little bit of feedback.
I mean, it's kind of showing the same thing.
Same thing, but this would have been the ideal entry. Andrews had a strong round, they pulled back. This is the ideal entry, right? It's okay. Andrews went up. Next pull back. Next right there we see good right jumping.
Okay, so which one's more of a stronger indication? Daily or before?
The daily is stronger. It's a whole day of price action.
Daily. So what are we looking
Just to get an idea of what the trend is, how it's been moving. And for our basically a trading today. Yeah, how it moves. You don't just know if you're looking at the daily, you're getting a whole day's worth of price action. You're looking at the 4 hour now, you're cutting it down, getting an idea of how it moves. On the day, it might look great, it's cool, it's up there. On the 4 hour, it might be like, oh, it's steadily going up.
I'm going to trust the data. So this is him. So this is him.
You go on higher time, you're going to see the trend. Okay, weekly, check. It's starting to come down a little bit, but then weekly's okay. And then it's daily.
So because it's between.
What's funny though,
You up for that?
I said, eventually, because there was a guy.
Yes. And then the daily is more like, the 4 hour, the weekly is like,
So let's say the daily and the 4 hours telling you the same thing, but the weekly is telling you something else.
beware. Because the weekly is a big one. The weekly is a bigger time frame. It's more data. It might be put. Yeah. He's saying, you have a time contract.
We were like, we're just all the time.
Dramatically.
It's cool. And if you get a book of one-on-one, feel free to do that. You book the one-on-one. You enjoy that. I don't.
I think I had to Friday.
Support resistance lines, right? And then you draw your home.
Yeah.
There's also ones that come with trade. So when you draw your home, you base it off what exactly she made. So
that's
No,
I know exactly. It's like an idea. So I have a free trading program. I'm free. I don't use one anyway. Yeah. So if I pay for you and you ask for it, it might actually be better. It might be.
my next question is, boom.
We actually,
Tell me,
we were talking about the water.
Yeah.
I was explaining to them the very beginning when we were growing. We had that, not from like industry funds though, but from
I just
industry.
say,
So they're coming, they would like learn from us, and we teach them, and then like they just dip out and think where they can do their own thing. Or like try to build their own thing, and then they would legitimately like talk to people. Yeah, and we'd be like, what? We like, but we had to come to the conclusion, it's like, if they want to leave, then there's not much to speak. You just have to be a good product and go over this.
I was buying one of those so I buy the regular right now.
Alright,
So you talking about gold and wood, right?
yeah.
Hey, for anyone I didn't check in with, I'll check in with you when we're doing our walk. We're gonna go to the local market because we have to leave now. After I'm with him, just let you know, kind of like you guys will be outside.
Yeah.
So I don't follow this person, I guess they follow my mind.
So I think what you're saying makes, I think I know what you're saying. I'm looking at the,
Yeah.
because you know what, so you wanna know what you're trying to buy and what the date is. Or you know what the date,
I can show you, but then I got to.
okay. All right, I'm gonna get you guys one by one.
So what made you get the house, man?
Well, maybe get a house. I need to put some money in real estate. I need a house because I've been using Uber and Airbnb.
Okay. So you didn't just rent it right away, or live there?
No, to live.
Okay. So
I've been using
property
Airbnbs.
taxes.
Crazy where you at, right?
Yeah, it is.
So you got it to live, but you just want to have your own.
Yeah, I want to have my own. Yeah, because Airbnb. I don't know what a property tax is, but it's like 380, I think.
Cali's more expensive than Florida.
Right.
It shit up here, you know, based on appreciation, it goes up every year. The property
Every
taxes,
year,
schools, whatever they have.
Yeah.
So, like, this is what I said. So this is like the room that I did project. So look, this is the property. That's where usually I work at. This is the one in Fort Lauderdale. Wait, which ward over? Renovations, builds, things like that. Oh yeah. So you can see that's the beach right there.
Whoa.
That's all custom building. But half the shit. Oh, that's what I was telling you for your crib. West Elm, RH House, Wayfair.
Yeah.
So like most of the stuff that I got, 'cause I got a trade account with them. So basically, so I get 20% off. So take advantage of that. You might have to switch the addresses up so there's a personal use, but you could find some stuff there. Pottery Barn.
Which would mean so they're driving cars.
Oh, yeah, the Waymo. Waymo. Oh, no, that's not a stop.
seen groups, other groups and stuff where it's like they start it and then they just focus on the genesis rate. They don't even really care about the actual thing.
Yeah, it's just in Austin, Texas. It's everywhere.
Yeah, you don't even get to trade it. Which is why, like,
I'm gonna share the link to the option pack right now. We having fun, we vibing. You know, we turn it up.
Oh, that's what
How much? I got them. For the Cheetos, you see, we're networking with the Cheetos. Yeah, that option pack is the good one. Damn, 4 hours live? Oh, we turned up today. All right, we about to hit a local market in LA. We about to turn up. Thank you guys for coming through.
So, what time frame is it? Yeah, you want to do the high, low, the lowest to the highest. So, like, you could do that if you wanted it, if you wanted to kind of have.
He's always been good at it. I've seen other people just
It's that big percent, that's $48.99 with a line at EMA. So I just did it. Yeah, see how I did it? See where I drew from?
Alright, folks. You can see the gang. They're having fun. Miyagi in the cut.
Yeah, that's what
So,
and then what I did too, I just looked at
the 4 hour live stream. We did
a
a 4 hour live stream.
But the EMA is all the way at the bottom, of course, 4 hours is going to show you know, there's two different daily, it all lines up. It's just the only thing that looks different is
You do your technical, you live?
Yeah, I'm live. 4 hours, 20 minutes. You guys, we finished now. Appreciate it.
When you do your technical analysis, do you do it on the weekly and the daily chart?
Yeah, weekly and a daily in the 4 hour.
Oh, so you do technical analysis on the 4 hour chart too?
Yeah.
So when you do your entries, you do it on the 4 hour?
No, the entries is in the 1 hour.
Okay.
I look at the 1 hour, and if I want a precise entry, I'll look at the 15-minute, 5-minute. Right, we head into the local market.
Do you think it would be bad to even try to attempt to enter trades on the 4 hour time frame?
It's not. I mean, it's not ideal, and you've got to be swinging for a long, long period. For a long period, depending on the 4 hour.
So it's not, it won't be as precise as the 1 hour.
No, exactly.
Oh, that's a retext.
Whose pen is this? Oh, okay. All right, folks. Thanks for tuning into the live stream. Have a great evening. We're about to have fun.
Let me make sure I get it right. You said technical analysis on daily, weekly, and 1 hour. And entry on 1 hour.
Weekly, daily, 4 hour.
Oh.
Yeah. Peace.